All right. Hello, everybody. Welcome back to another episode of The Market Close. It seems like this morning I scheduled the stream for 8:45 p.m. And this afternoon I scheduled the stream for 4:45 p.m., not 3:45. So I'm sorry about that. I don't know why I keep scheduling it wrong. Someone said I'm drunk off mayo and vodka. Well, I'm not drunk off mayo and vodka, but I am drunk off a little bit of green. And I think a lot of you guys have to be drunk off a little bit of green. Folks, we are in one of the best days of 2024, which really says something about 2024 because it's been a hell of a year. We've had a lot of good days. Today is one of those days where it's just like, wow. What a market we have entered into. I mean, let's get the show started. Just taking a look at some of these equities in the 12 minutes into the close. You've got Palantir at 31.23, holding 31 very nicely, up about 1% on the day. Again, it's already up a lot, so $31 is, even pushing 31 is tough for Palantir, but it's doing it. And it's doing it because there was a lot of macro data this morning that we're going to summarize in a bit. But in general, people are ready to pay above $30 for Palantir. So amazing stuff from Palantir. ASTS, this thing is only going further. It's up 51% on the day. So if you're in this one, congrats. But this one just completely took off today. Nvidia added $200 billion in market cap. Over the past 5 days, it is up 30% in the past 9 trading sessions, up another 3.68% today. Top was 123, currently at 122. Robinhood up 4.85%. At one point, it was $20.07. Right now at 19.56. A close above 19.50 to me is still incredible for Robinhood, up about 5% on the day. They got upgraded by Deutsche Bank for $24. Renaissance Technologies added 2 million shares in Q2 on Robinhood. I've been looking through a lot of the 13Fs. And Norges Bank added 8 million shares over Q2. So we've seen a ton of different new companies add positions. I'm going through all the filings, and probably tomorrow I'm going to show which firms added Palantir, which firms added Robinhood, Nvidia, et cetera. So I'm going to go through all that tonight, but that's some of the data that I saw this morning. Now, interestingly enough, Robinhood's up 5% and Bitcoin's down 2%, dude. Bitcoin hit 56,722. On a day where Bitcoin goes down 2-3%, you would think some of, the crypto plays really get hit like a Robinhood, but the street seems to be detaching it from crypto, and they kind of don't care about crypto anymore. They care about the actual growth of Robinhood today. Which is really important for the company. Now, crypto stocks in general are still doing okay. Coinbase is up 1%. It was up a little bit more. CleanSpark is up 3%, even though Bitcoin and Ethereum are down. So as you can see, all the crypto miners and the MicroStrategies of the world, they're not fully red because the market kind of is not really buying this Bitcoin collapse. I don't know why Bitcoin's down. If you have a guess, please put it in the chat. I would love to kind of get your thoughts on it, but I kind of don't know why Bitcoin's down today. I mean, today's an everything rally, and Bitcoin is not participating at all. You would imagine Bitcoin has some more momentum here, especially with the data we got this morning. So Bitcoin is the one thing that's lagging. Max 7, take a look at that. Tesla 6%, Nvidia 3%, Amazon 4%. I mean, if you got Amazon at 150, dude, congrats. Incredible. Google taking away all the losses they had yesterday at 162. Meta $4 away from all-time highs at 537. Microsoft at 419. Microsoft again 460 was the top, back at 420, dipped to 385. Not a bad swing on Meta and Microsoft. And then Apple at 224, up about 1.24% on the day. So why is this happening? If you missed it today, we got jobs data, and the jobs data was exceptional. The market was expecting 236,000 people to file for jobless claims, and we had 227,000. Now, although that's a slight miss, and it's not like 200,000 or 100,000, the point is that's actually a good thing because that means that the market is not too hot. And if it was that, then maybe inflation would still be a concern. So because we had less than expected, but not that much less than expected, it basically showed the market, hey, things are okay in the labor market. Things are not that bad. And if things are not that bad in the labor market, well, then you have to ask yourself, all right, so if the labor market's okay and unemployment is not getting that bad, and we have CPI that came in at 2.9%, and we have Walmart saying the consumer's in a great position. Walmart, by the way, that stock currently, it was up 8% on the day. Walmart is now up 6% on the day. And you've got the Fed now getting ready to do 25 basis points of a cut. It's just hard to really, really see where the crazy bear case is coming from in the broader market. And that's kind of the macro recap for today. Retail sales. I forgot to mention that. Retail sales up 1% as well. So the consumer spending, inflation's going down, jobless claims lower than expected. Fed futures pricing in 25 bips over 50 bips because obviously the data today was a little bit better, so that means that the rates, the probability of rates going down comes down a bit. But you're still looking at a 25 bips into September and probably 50 to end the year out. That is the question. Do we have a soft landing? And it really does seem like we're seeing enough momentum to justify that there is the potential for a soft landing. He's going to join me at 4:10, and we're going to break down what's going on in the semiconductor sector along with AMAT Applied Materials. They will have earnings today after the bell, so we'll take a look at them. He'll break down those earnings with me at 4:10. But in general, dude, it seems like things are not in the worst direction, and I still want to do even more research on the potential bear cases that are out there. I just, from everything I'm looking at, it's like it's hard to be super bearish. Now the caveat here is that I don't think you go all in on equities right now because the face ripping rally that some people want to have, we've kind of had all of 2024, right? We've had an amazing year, so I don't think this is the time to be like, all right, I'm gonna just buy everything at these levels, because the risk reward for a lot of these are not that good. Like the risk reward on buying Palantir at 31 is not the best as it was at buying it even at 23, 24, 26, right? So it's not like I think a ton of money is going to pummel in to the markets, but I do think a ton of money is going to ask themselves where they'd rather be. And maybe they would rather be in the markets versus collecting an APY. As I say that, I have the release of the money market funds. Let's see what you guys think in the chat. Do you think it increased or decreased? Last week, it increased by $59 billion, and we had a record high of $6.19 trillion. So now the question is, do you think it increased or decreased? Let's see what you guys say in the chat. And then I will show the answers. But yeah, in general, I don't know, dude. I think as rates come down, people don't have to like get super, super excited to buy some of these names at the top. But if there are certain names that are better than expected, that the risk reward is like very attractive, then the risk reward, if we're in a bull market, starts to get more attractive, and you kind of don't want to just get a 5% yield or sit in a money market fund. All contingent on rates coming down and us definitively proving we are in a bull market. One thing I said yesterday was that I don't think the market fully believes this is a bull market yet. And I actually forgot jobless claims were coming out this morning. And then someone in the market close commented like, oh, we have jobless claims data. And I was like, oh, that really makes sense. So in my head, the market still is uneven on this bull market thesis or not. But we need a lot of data to keep confirming that things are right and that August 5th wasn't that crazy. And the data we got this morning on retail sales, CPI yesterday, and jobless claims basically did that, at least for now, which is important. Decrease. Okay, so most of you guys are saying decrease. We got an increase of $28 billion, $6.22 trillion. Money market funds have now had the most amount of money inside of them for the second week in a row ever in their history. So money is still cautious and saying, hey, we're going to wait out on the sidelines. Again, I still think the market doesn't fully believe this is a bull market yet. And maybe another couple weeks of data with unemployment being good, CPI coming down, PPI coming down, et cetera, is going to more so guarantee that we are in a bull market, and then that money starts leaving. But when that money starts leaving, if the S&P is already at 56, 5,700, whatever it is, maybe that's where you get the face ripper to 6,000 by the end of the year. I know that's uber bullish, but like that is a very big possibility, because the one thing I've noticed as well about the markets and like about myself and just consumer psychology, behavioral psychology, people buy on the way up, dude. People don't buy on the way down. Like it's just, that's why this morning I was just taking a moment to congratulate anyone who bought the dip, because like it's really hard to get, like, especially as retail, it's hard to buy the dip because it sucks. You want to panic at that moment, and most people buy on the way up. So if a lot of that money, even 500 billion of that money, which by the way, the precedent was in 2009, $500 billion left money market funds, and the S&P rallied 27% that year. That was after the 2008 crash. If that money, this is not a crash, but if the yield goes down on your assets and money market funds, maybe that money starts chasing. And maybe it starts chasing when markets are already pretty high, and it just pushes it a lot higher. So we're going to see what happens, but not bad in the context of money market funds. S&P 552. I mean, dude, could you imagine that we would be at 552 when we were at 507 on August 5th? August 5th might have been a day that created real amounts of wealth and prosperity for people that bought the dip heavily on that day. And maybe it's too soon to say that because things could still hit the fan and things could still get rough, which is very, very possible. But August 5th, in a bull market, in a raging bull market, the NASDAQ is up 5% on the week. It's up 2.45% today. This sucker was at 420 on August 5th. Like, in a raging bull market, you do get drawdowns, but you don't get the type of drawdowns where you saw the VIX spike to 65 and equities were on sale at a level that I don't think we would have imagined. We wouldn't imagine Palantir at $20, Robinhood at $13, Nvidia at almost $89. Like, we don't imagine that stuff given the earnings growth that we have. The earnings growth justified people buying the dip. The Japanese carry-yen trade basically being stalled by Japan not raising rates and coming out and getting a phone call probably from some very important people to just like chill out a bit. All of that allowed that dip buy to be pretty strong. And it seems like that's what we had in the past couple of weeks in the market. We have AMAT reporting earnings today. They're the most important one. I think we have a couple other companies, but AMAT, Applied Materials, they're the most important ones. Guys, I'm going to be really honest. I don't know what the hell Applied Materials does. I don't know. I can't act like I know every single company. I know they're in the semiconductor space. That's why we'll have Jose join me at 4:10 to break down Applied Materials. But I don't know what the hell he does. You know what happened really good that was before the show started when the market closed. So I was going to tell the story in the beginning, but I forgot. My dad called me after the market opened, and he was like, yo, my dad rents out a property, and he gets like $2,700 a month from the property, and he gets paid in money orders, which means someone gets the cash from the bank, and then they give it in the money order, and then he has to go to the bank, and he lost it. And so he called me up, and he's like, yo, like, can you check my pockets, blah, blah, because he's at work, and after 30 minutes, I couldn't find it. And I was so sad, dude, because like $2,700 is a lot of money, bro. If to anyone, it's a lot of money, especially when you have a property and like that's the month's rent. Like, to lose a month's rent sucks, right? And then he called me and I couldn't find it. And then finally I checked this little part of his drawer and he thought he like lost it at work or something fell out of his pocket. And I fucking find it. It's a pink little slip and I find it and I call him back and I'm like, Dad, I got it. I'm telling you, the feeling of finding those money orders to make sure that he did not lose $2,700 on the rent, that felt better than being up $25,000 today. Because my portfolio was up 25 grand. That showing my dad that $2,500 rent money order felt way better. And I think it goes to show the value of just like hard earned money and really working for the shit. It kind of took me back to perspective. It's like, dude, the stock market is fake money. Like, it's real money, you know what I mean? But it's still fake money. Like, someone who loses like a month's worth of rent just because it like dropped out of their pocket, like that shit's heartbreaking, dude. So that was very important for me to find. And that's why I had a really good day. I mean, that made that was the defining moment of this day for me outside of the green market, because we were able to show my dad that he did not lose the rent on the day. Did you get a commission? No, my commission is free rent for my own, for living in his house. That's my commission. All right, folks, we're going to have Jose join in about 10 minutes. We're going to break down earnings, Applied Materials, see how the market closes, 4 p.m. Thursday, August 15th. Thank you, everybody, for being here. The stock market is now closed. All right, here we go. Pretty incredible day in the context of the market. Who the hell pays by money order? I was shocked too, dude. I was like, money order, Dad? Like, is it like do people still use Western Union or so? I was so confused. I was like, money order? But apparently his tenants pay with money order. And I was like, because I thought he lost the check. I was like, oh, they can just write you a new check. He's like, no, this doesn't work like that. It's a money order. I was like, oh. And so I'm happy we found it, because I could hear the pain in his voice. He was just so sad losing it. But we were able to find it. All right. S&P ends up 1.7% on the day, 553. NASDAQ 474, up 2.53%. Palantir, fourth close above $30. Second day in a row closing above $31. And folks, it kind of feels like Palantir is getting normalized in the $30 range. I mean, we haven't seen Palantir in the 20s in 3 days, which is insane, bro. It's crazy to say. $69.89 billion market cap, basically $70 billion market cap. Palantir, 31/2022. We did launch the merch store today. For anyone that didn't catch that segment on the market open, I'm going to put out that video later as a separate clip. But Ilyano joined the show, and he basically talked about why they brought the merch store back. So you guys can check that out later. Nvidia ends 4% up on the day at 122. Robinhood, 1961 after hours, up 4.8% of the day at 1955. Celsius up 6% of the day. Ulta Beauty up 11% after Buffett bought $260 million of Ulta Beauty. IWM up 2.6 today. Small caps caught a bid. Short QQQ down 7.5%. SoFi as well up 4.5. So SoFi had a great day, up about 5% as well. Tesla, amazing day, 6.34%. Snowflake was flat. It was more red, but then it got a little bit of a boost intraday, but ended red on the day. Let's go to the Mag 7. Mag 7, all were green. Meta 537, Microsoft 421, Google 163, Amazon 177, Nvidia 122, and then Tesla here at $214 on the day. Rocket Lab's up 12%. Wow. I didn't see that one today. Oh, it crossed $6. I did see that. It crossed $6 for a little bit, up 12.55%. Peter Beck, absolute rock star. Rocket Lab growing in terms of its investor base and up 12% on the day. Congrats to those that are in Rocket Lab. Okay, AMAT, we got the Rocket Lab man himself, Matt Money, Wenjet. Yeah, Matt, I think if this thing goes to $10, Matt's gonna buy the whole Rocket Lab company or something. He's got a lot of Rocket Lab shares. Okay, AMAT. You know, AMAT sounds like a MIT. AMAT. People have actually called me, dude. People have called me Amit. They've called me some really weird names throughout my whole life. But AMAT, Applied Materials 209 down 1.24%. Let me see if I can bring up the earnings. Again, I don't know what these guys do. They do something. They apply materials, I think, in some way. But they're important in the semiconductor industry. They are a $175 billion company, dude. That's a big company. All right, EPS beats by 10 cents. Sales beat by 30 million. Or by 12 no. Yeah, basically 30 to 40 million. 6.78 billion versus 6.67 on revenue. EPS 212 versus 202. Stock is not really moving after the bad. It's down 1%. It was up 5% on the day. So if it has a little bit of a tumble, it's, you know, still had a good day on the trading day. Applied Materials 211.83 after the bell. They make machines for various semiconductor manufacturing processes. Okay. That sounds pretty important. And if it's a almost $200 billion company, that seems like it makes sense. Let's look at their stock chart for the year. Because I think this stock was higher at one point, if I'm not wrong, as well. AMAT, what do we have? Year to date, 37%. Yeah, at one point it was wow, dude. See, the July to August rundown was real. AMAT was 250 in July. It's 211 today. It bottomed at 178. So everything got hit. 6 months up, it's up 12.8% in the past 6 months. Year to date, up 37%, which is not bad for AMAT. Okay, cool. Let's see what else we have. So Palantir 31.22. GameStop was up 2% on the day. Oh, by the way, you guys will get a kick out of this. Grinder's down 3%. Remember in the morning we saw Grinder was down, and I was like, well, why is because we could find nothing that was red, but Grinder was red. Well, you want to know the reason Grinder was red? Well, the app went down. I guess too many people were using Grinder, and the app went down. Look at this, dude. Look at this post. This post, Grinder is currently down for all users, 5.7 million views. I'm telling you, Grinder is in the zeitgeist of pop culture. Like this is not YouTube or Instagram being down. This is a gay dating app that got 6 million views off someone saying that Grindr is currently down for all users. I mean, I don't know, dude. I think people care. I think people care about Grindr, but that's probably why it's down right now on the day. Now, one thing about Palantir, let me sprinkle a little bit of, this is not really bearishness, but rather just show you guys some of the stuff that's happening in terms of the sell side. I found out a firm that sold a decent amount of Palantir today. And it actually shocked me a little bit. I didn't think they would have sold that much, but they did sell. So let me pull this up right now. Let's bring this up right here. So, well, there's a bunch of them, but this one is the one that I want to show. Yeah, so here it is. Okay, so Renaissance Technologies, they added 2 million shares of Robinhood in Q2, and they sold 14 million shares of Palantir. Or sorry, that was Peter Thiel. They sold 7.8 million shares of Palantir. So Peter Thiel, we already knew he sold a ton of shares. He still has 148 million shares, so that's fine. Renaissance Technology still has about 40 million shares, but they sold 7.8 million. So now it is 1.7% of the entire portfolio, still a lot, but they did sell. Cube Research and Technologies also sold 7.1 million shares. Millennium Management sold 7.7 million shares. Susquehanna sold 6 million, Two Sigma sold 5 million, Citadel sold 4 million. A lot of these are more, banks that sell and market makers that sell in and out of everything, like the BlackRocks, the Vanguards of the world. The Renaissance is more of a actual fund. They've had Palantir as a top 3 position for a long time. I still think it is top 3 in the port. They've owned it again since Q2 2021, but they did take their profits. And I mean, technically they took their profits a little too early, right? If you judge it from the standpoint of where we are right now, they probably sold at 25, 26, maybe they got the 27s, but that was pushing into Q3. So realistically, they sold at 23 to 25. We're at 31. So did they buy at 8? No, I think they probably DCA'd at 8, but they didn't buy at 8. Here's the link for anyone who wants to see it and go through this yourself. This is a good website that lets you see all the stuff. But they probably had an average of, I would say, in the teens. I don't think they have an average of the single digits because they were buying in 2021. But those were some firms that did sell. And again, you're going to see selling, right? These are hedge funds. They have to sell. It's not like they can just keep buying. But that one was a more aggressive of a sell. And then here's what we have on Robinhood. So I'll show you this as well. First, I'll show you the ones that sold. Index Ventures sold 16 million shares. Vlad and the insider sold some shares. And then you have a bunch of other firms that sold a decent amount of shares here. And then you had a lot of firms that bought more shares. So if you put added to instead, and let's put new, change in shares. You can see Norges Bank, 8 million shares, FMLR, 4 million shares, BlackRock, 3 million, Morgan Stanley, 3 million, Renaissance Technology, same firm, added 2 million shares. So you had a lot of them that also did add more shares as well. And so it is what it is. But one thing just wanted to show in the context of some funds that are adding and some funds that are selling. Probably rebalancing. Yeah, to an extent. Now, Renaissance Technologies, that was an interesting one because if they're rebalancing, then they thought it was probably time to take some profits because they've owned it for a long time. And, they're probably allocating to different things. But technically, maybe they didn't get the best deal given Palantir has continued to run. But that's kind of what happens sometimes when you're rebalancing. Nvidia right here, 122 up 4% on the day. QQQ ends 2.5%. And then S&P up 1.7% as well on the day. All right, folks, let's bring in one of our favorite analysts on this show who's going to join me for the next 20 minutes to talk a little bit deeper on what's going on in the semiconductor market and applied material earnings. You guys already know him, Jose.
Hello. Good afternoon.
Good afternoon, man. How are you doing?
Pretty good. Pretty excited for today. I had to wear a green shirt due to the amazing green day we've been having for a lot of tech and semiconductor companies.
And as you say that, Bitcoin is now down 5% to 56. It's in. Are you in Bitcoin at all, Jose?
No, I am not. I'm not in no crypto at the moment.
It's interesting because Nvidia, their first run in 2021, that was because of crypto. So it's funny that you didn't get interested in crypto, even though your favorite stock was running.
I want to say I think during that time I was into crypto, but just your typical trying to get a small position here and there. But yeah, Nvidia always gets its hands in different places at the right times.
All right, so AMAT, here are the results. I'm putting it on the screen, but before we get into the results, what does AMAT do and how important are they on a scale of 1 to 10? Stock is flat after hours in the semiconductor industry.
So in the semiconductor industry, they're pretty important. A quick background, they design a lot of equipment needed for the manufacturing space. They are, I want to say, unlike we hear a very popular semiconductor company called ASML. So ASML designs semiconductor equipment, but they're pretty much a monopoly in their space. AMAT, they're not a monopoly in their space. They hit a lot of different industries. They have a lot of market share. So I would say maybe in forms of importance, somewhere around 8 or 7, just because they do have a huge market share in a lot of the different aspects, but there is a lot of competition, not a lot, but they have competition opposed to a company like ASML that doesn't have competition in their space.
Okay, so those are the earnings right there. Revenue $6.78 billion, up 5% is not a growth company to me, like some like TSM or Nvidia, but still impressive numbers. Operating margin 28%. CEO says AMAT is delivering strong results in 2024 with record revenues in our third fiscal quarter. The race for AI leadership is fueling demand for a unique and connected portfolio of products and services. Is that a acceptable quarter for you? And do you even own this name?
No, so I don't own Applied Materials, and typically I don't own any of the big semiconductor equipment companies like Applied Materials. There's Lam Research, there's ASML, And the reason I don't own them is just they tend to really much follow the semiconductor market. It's not a bear sentiment at all, but usually these stocks just perform almost to the SMH. I was just looking at the past 5 years year return, and SMH did roughly like 350% in the past 5 years. Most of these big semiconductor equipment giants also kind of are within that space. So for me, when I'm looking for an investment, it's not that I'm just a good company or a bad company. Is do I expect it to beat the semiconductor market, or would I just invest in the ETF? Applied Materials falls in that space where it's a good company, but I don't think it will outperform the semiconductor market. So I'd rather invest in the ETF instead. In forms of results, I think the results were great. I mean, pretty much in line with what we're hearing. Semiconductor equipment is kind of picking back up. We had a bit of a slowdown in the past few quarters as utilization rate in a lot of these factories were really, really low. So if you're a manufacturing factory and your utilization rates are pretty low, obviously you're not going to buy equipment because you don't need it at the moment. Right now, we're seeing utilization rates improve a little bit, but they're not at 100%. So that's why you're not seeing much revenue growth on these big manufacturing equipment players. In the upcoming quarters, as we start to sell more PCs, more phones, more AI chips, utilization rates should increase, and we might see a nice boost in some of these semiconductor equipment plays.
Okay, so because it's more of an equipment play, it's not that much on your radar in terms of excitement for you. One of the names that is on your radar, obviously, is Nvidia. It's up $220 billion in the past 5 days, 30%.
Insane.
So insane. So two questions. A, did you buy the dip on August 5th? B, do you think this run is justified?
I don't know if I bought necessarily the dip, the bottom, but I did kind of get some at around like 108, increase my position. So I purchased at 108 and 111.
When's the last time you purchased before this 108 purchase?
Oh, before then, I want to say it's probably since this run up of pre-split, probably before the stock was even $300. I don't think I touched it when it rallied up. I was just happy holding.
So basically post split, you purchased at maybe $20. That's the last time you really bought.
Yeah, around those levels.
So you're buying after a 5x, dude. That's
but for me, these were very small compared to like my original size, right? It was just more to just, hey, I want to add a little bit more on positions. And with these shares that I purchased, these are what I'm gonna call my option shares, where I'm gonna sell calls on these that I purchased just to help build out some of the maybe some short-term income for me with these shares, and still have the aspect of being bullish for this company. So this isn't going to really do much for my long-term investments, more for just being able to get some short-term income via option plays.
Okay, so let's talk going into earnings. The hyperscalers are spending all this money on CapEx, and they are being ruthless about it. It's a really weird conundrum I think we're in, because if they spend a lot on CapEx, but the market says we don't see the ROI, they tank, which is what happened in Q2. And if they don't spend as much, the market thinks, well, this AI revolution isn't that real because you should be spending as much as you can on CapEx. So it's a catch-22. Do you think Jensen needs to have a moment where he tells the millions of investors that are listening on Q2's call and just be like, guys, like, this is a revolution. Like, just chill out, relax, stop going crazy, let Google spend some money, even if you don't see the ROI, they're good for it, and give them a couple years. How do you think Jensen can calm down the street's concerns about too much CapEx or too little CapEx?
I think at the end of the day, the street is always only looking at the next 12 months. So no matter what Jensen says, the street is only going to care about the next 12 months. And I think this technology is going to take longer than that. Luckily, we have companies like Palantir that came out with earnings. And I mean, their CTO pretty much mentions that right now, the bottleneck is kind of in getting from production, not from prototype to production. So companies like that, when Palantir CTO kind of says that, hey, look, right now, the big bottleneck is it's so much harder to get from a prototype to a production compared to even any other software. But they're helping companies do that. We're seeing that kind of partnership with Microsoft. We're seeing Microsoft and kind of the partnership with Wendy's. I think that's when the street starts to realize, okay, this is a play that's definitely has some movement right now. And we, unfortunately, I want to say for the AI space and for Nvidia, we have to just keep seeing evidence like that on a quarterly basis, maybe even on a monthly basis. We need to see kind of either partnerships like that, results like that, where, hey, look, some company is definitely doing good with AI, because the street is definitely not forgiven.
Okay, so you're saying something that obviously is very enticing to me and to my channel, but you're saying, hey, Palantir is a prime example of proving to Wall Street that AI does have a use case because they're putting up the numbers. And if that's the case, the street will be able to deal with the increased capex because someone in their investment committee on JP Morgan will go, well, look at Palantir. They're showing the results. So obviously there's got to be something good from this AI thing.
Definitely. And then I think that's the case. Right now, Palantir also made it seem and made it the street understood that you can't just do it right away, right? They mentioned I think it was 10 to 100x that the CTO mentioned in forms of how much harder it is to go from a prototype to a software than from a prototype to an AI solution, and going to a software solution is already pretty hard. So it just kind of tells I think companies like that are what help Wall Street understand that, hey, look, it's not just a quick switch that we can kind of turn on. And then the other thing is, I think Wall Street right now, or in the past few months, was kind of really looking for a line that says AI revenue is coming from here. But I think the street is now understanding that, hey, look, Meta's advertisement revenue was really improving thanks to AI solutions. But you can't really kind of just put AI revenue in advertisement like that. So I think the street is also understanding that AI revenue is not going to have its own line, but it's going to be more of a benefactor of the other core revenues that these companies have.
Right. And I think we're seeing that a lot in these companies mentioning the internal use cases of AI. I mean, even Shopify talking about how they're actually implementing AI in the operational workflows of their core business. That's something that the street really wants to hear. Sticking on Nvidia, I want to play this clip. Now, this is not the Eric Schmidt clip that went viral about basically dump your other stocks and buy Nvidia. This is another clip of him talking about Nvidia's moat, but I want to get your reaction to this clip and then his other clip about why you should probably buy Nvidia.
One more technical question. Why is Nvidia worth $2 trillion and the other companies are struggling? Technical answer.
I mean, I think it just boils down to like most of the code needs to run with CUDA optimizations that currently only NVIDIA GPUs support. So like other companies can make whatever they want to, but unless they have the 10 years of software layer, you don't have the machine learning optimization strategy.
I like to think of CUDA as the C programming language for GPUs.
Yeah.
Right. That's the way I like to think of it. It was founded in 2008. I always thought it was a terrible language, and yet it's become dominant. There's another insight. There's a set of open source libraries which are highly optimized to CUDA and not anything else. And everybody who builds all these stacks, right? This is completely missed in any of the discussions, right? It's technically called VLLM, and a whole bunch of libraries like that. Highly optimized CUDA, very hard to replicate that if you're a competitor. So what does all this mean? In the next year, you're going to see very large context windows, agents, and text action. When they are delivered at scale, it's going to have an impact on the world at a scale that no one understands yet. Much bigger than the horrific impact we've had by social media.
Thoughts on that? And then he further goes to say that all the money's probably going to go to NVIDIA's GPUs.
Yeah, I mean, the truth is, NVIDIA is just far ahead of the competition in every aspect, from infrastructure builds to hardware builds, their own chips, to even the software solutions like we have here from CUDA. So CUDA is such an important, but that's the other thing. It's like open source software where all these developers are building their AI applications or their AI agents know that, hey, look, for me to have the best optimized results, which are probably going to be the cheapest results as well if they're using AI solutions, is going to have to go through some form of go through CUDA. So I have to use NVIDIA's software one way or another, NVIDIA's hardware one way or another. So it just continues to fuel that circle. Then you have more developers fueling there. Then you're going to have more developers learning. So that circle just continues of NVIDIA just becoming a dominant player here. And that's why you see a lot of big players like AMD trying to really grow more in this software space. But NVIDIA, way far of the competition. And this is why I think the delays of Blackwell, if not true, there's definitely some smoke there, really didn't cause too much care for the stock.
Yeah, I was going to ask you about that, the Blackwell stuff. So let's just say it is true. Does that matter at all?
So let's think about delays in forms of what is a product delay? When is a product delay usually a bad thing? And I want to say a product delay is usually bad when there's for two reasons. One, you're going to have a revenue decline because your consumer, whoever your customer is going to be like, okay, look, I'll still wait 3 months for the next product. I'm not going to buy your current product. The second reason a product delay would be wrong or horrible is if the competition is right behind you. So let's say Apple delays their product and Google just released their phone. If since the competition, they're so close to each other, maybe a lot of consumers from Apple might move to Google to get the better phone.
Right.
For Nvidia, let's put it in that regards. Is the competition going to get any closer in the next 3 months if delays are true? No, I think they need at least 2 years for any of the competition to actually be behind Nvidia. So the delays won't affect it in forms of competitors. The second thing is now if delays are true, are they going to see a decrease in revenue? We keep hearing from all the street that the demand for the H100 and the H200 are still pretty high and supply constraints. So they're still going to see that revenue growth. So I don't see the two negatives from the delay really impact, but this does bring more risk to Nvidia in the future. I think these tech companies used to improve their technology every 2 years. Now they're doing it every year. And Nvidia building a chip is not just Nvidia, right? They use memory from companies like Micron, SK Hynix, Samsung. They use advanced packaging from TSMC and all these other players as well. So it's not just Nvidia that also needs to evolve. I think Nvidia is pushing these other players that need to evolve at such a quick pace. And I feel like any of those other players can also have a slip up. And that's when maybe we might see some more delays in the future if possible. Because it's no longer just Nvidia where the risk is. It's now the rest of the technology needs to improve with Nvidia for them to release these amazing chips.
Right. Do you think CUDA is an impenetrable moat?
I wouldn't say it's definitely heavily guarded. I don't think anything anywhere in the market is ever fully indestructible. But you need to have a lot of money, a lot of cash, and then just for developers to switch to a new type of system, it usually takes some time. So it's not just having the best product, but also the developers behind it. And I think the developers behind it is what takes time as well to build up.
So you think they crush earnings in 2 weeks?
Oh, for sure. And I think great guidance.
Wow. All right. That's exciting.
And if they don't, I think it's a buying opportunity. So win-win for bullish long-term investors.
Yeah. At the end of the day, it is Nvidia. You've answered this question a lot of times, but people really want to get your updated takes on this. Big tech designing their own chips. Does that matter at all for Nvidia?
No. I want to say again, within the next 3 to 5 years, I don't see this being an issue. The main reason is big tech develops chips that are good for one workload. And that one workload is a workload that they usually do over and over and over and over and over again. So if they do something over again, they can really optimize it. AI solutions continues to evolve. So it's not just one workload, it's 10, 15, 20 workloads. And who knows, the next large language model that's going to come out in 2 years from now, or the next AI solution is going to use some new workload that's not even thought of right now. So those chips that they are developing are not going to be good for that. It's just going to be good for optimizing what they currently know, because they're not reprogrammable like a GPU, which is programmable for different tasks. And at the end of the day, these chips are not just used for AI, they're used for every other clouding solution out there that all these big cloud players use.
Okay, so you think that Nvidia is going to crush earnings. If they don't crush earnings, that's okay. Big tech, not really that competitive yet in the context of Nvidia. So final question here on Nvidia is, do you think Jensen has something up his sleeve that we don't know about? Because on the last one, it was Blackwell, right? And he kind of explained it in a different way. He said, we're already going to start seeing revenue from it. Do you think there's something there that kind of that extra punch that really guarantees that people are going to be afraid to sell the stock?
I think in forms of technology for them, no. They only really show some huge technological boost on GTC, which is sometimes once a year, sometimes 2 times a year. We haven't heard answers that it's going to be 2 times, so I'm assuming this year's only going to be once. The only thing that I want to say is maybe they showcase some big partnership with some big company.
Oh, like Palantir?
Like
are you telling us they partner with Palantir? Is that what you're
or they announced that a lot more people are building way bigger data centers, because right now we have not H100, we have XAI that just built their 100,000 GPU system.
Yeah.
We want to hear more about those, and eventually we want to hear about the 1 million GPU systems, where Jensen believes will come somewhere around 2026, 2027.
Right. You know, and it's really interesting. Grok now, you can make images, and they're using a lot of those H100s to train their models to make images. They have this internal distribution advantage called Twitter or X that allows you to get those images out there, which compounds the effect of more people making images. So this thing is just getting started. Like OpenAI Sora, I know that we haven't seen much of that, but that's getting ready. Like there is so much that you're going to need models to be trained on. It's really hard, even if the stock falls 10 or 20%, to forget how much demand they're going to have.
Yeah, I mean, right now it's just drawing pictures. Imagine when it starts doing a whole comic book, a whole movie, even a 10-minute clip. It will be insane. Right now, your clips are like 8 seconds if you're generating something. So, I mean, technology is the dumbest, hopefully, of where it's going to be in the next year or so.
Any thoughts on AMD at these levels? It bounced from 120 to 140.
I mean, I think AMD at these levels is pretty good. I mean, they're taking market share from Intel in both the CPU, the client side. They have a great partnership with TSMC, and they also have the potential of AI accelerators. So I think if you're looking for a company that you don't want the full AI exposure, but you want some AI exposure, you want some other consumer exposure, I think AMD is the way to go. Obviously, if you just want the full 100% AI exposure, Nvidia is the way to go. But AMD, one that I really do enjoy as well at these levels.
Okay, Jose's YouTube is in the chat. Everyone, please make sure to subscribe to Jose. Jose got one more for you. And his YouTube is right there. Intel, tell me something good about this one. Something that that makes me excited about getting. I mean, it's trading below its tangible book value.
Yeah.
Is there anything here outside of the CEO tweeting out prayers that can get me more excited about buying this stock?
I think Intel this is going to sound so weird to say, but Intel is going to be one of those stocks that is either going to do really, 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 really good or really, 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 really bad. There's no in between for Intel. So for me, I think their really, really good aspect is only going to happen if they really showcase their manufacturing push. And they're doing things in that manufacturing push. They're buying the high expensive equipment. They're expanding their manufacturing footprint. They're making they're improving on their nodes. So there is potential there. And for me, Intel is one that I personally wouldn't touch in forms of shares. But like I mentioned earlier, I think this is a stock that can either do really bad or really good.
But why wouldn't you touch it? Does it have cooties or something? Like, what are you saying?
I think so. I think it has cooties. I think AMD is a safer place right now.
It has cooties because it doesn't have CUDA.
There you go.
But so you just think the overall PC market share is going to AMD over Intel?
I mean, right now Intel is definitely losing. I mean, if you look at their 13 and 14 consumer CPU cores, they have a lot of instability issues right now. In forms of their earnings, they saw not much revenue growth in any of segment, where AMD was growing, some at even triple digits, some at double digits. For me, Intel, if I wanted to have a nice lottery bet on Intel, I think the best thing to do is either buy a 2-year leap on this stock, two-year leap call on this stock at like $40 or something like that, where you're paying probably like $80-$90 for that call. But like I mentioned, if this stock does really good, if they really show manufacturing is winning, this stock can really 2x like nothing. But it has to showcase that manufacturing is good. So I wouldn't touch it in forms of shares. I would maybe do like very, very far in form of time and price leap calls, where if they do really good, you can really, really make some money out of it.
Right. An actual last question here, Jose, because I forgot I wanted to ask you about this. Dell, JP Morgan still says 160. They believe it's still going to have AI beneficiary effects from SMCI. Oh, and I got to ask you about that. So let me ask you about that, and then you can comment on Dell as well. So SMCI raises guidance from 23 billion to basically 26 billion, up to 30 billion. So almost a 5 billion increase in guidance for the next year. But they tanked 30%, now down almost 50% from the top because gross margins go down 4% year over year. But it seems like that's good for Nvidia because it means more demand. And it seems like that's also good for Dell. And if Dell can get the operating margins up, that is where Dell has at least somewhat of an advantage. So what is your take on SMCI falling? And Do you think Dell is attractive up to 160?
I think as SMCI falling, obviously now it's hindsight, was just too much. They raised revenue guidance dramatically. It was insane beat. Operating margins did take a huge hit, but they did mention that the reason operating margins took a huge hit is because they sold a lot of revenue to a big cloud server provider company. And cloud server provider companies, like those giant ones, they tend to have very low margins when you go there. So they mentioned, hey, look, in the future, we're going to focus on tier 1 cloud server providers. We're going to focus on tier 2 cloud server providers, on tier 3 cloud server providers to make sure our margins are going to be intact. So I think in the short term,
so you don't think margins are going to be 11% in the future?
No, I think it's going to go back to where they want, that 14 to 17%. It's going to stay within the guidance that they gave. They're building in Malaysia. They're increasing there. This time, they also saw a huge hit on liquid cooling components that they had to pay expedited costs for, and it cost them about $800 million in revenue. So I think the fear of, at the end of the day, I wouldn't touch these AI server companies because they are a hardware company, but I wouldn't kick them down because of this margin short that they saw right now, because they did give us the reasons why it happened and they made sense. And I do believe within the next few quarters, they can bring it back up to their original range that they normally speak of.
And I'm not wrong saying that SMCI raising guidance is good for Nvidia, right?
100%. You're not wrong. That's 100% the truth there, because they're the ones that have the most AI chips. So if they're selling more AI servers, it means more chips are going to Nvidia.
Got it. Jose, thank you so much for blessing us for 20 minutes of Semi's goodness. There's Jose's YouTube in the chat. He'll be back next week, and appreciate it, man. Thank you so much.
Thank you. Appreciate it. Bye.
See you later. Bye. All right, there you go. So interesting stuff. Jose seems to be bullish. That was surprising to me. I didn't know he bought Nvidia for the first time at 108. So this is a guy who, I don't know what his average is on Nvidia, but it's much lower than the price right now. If he hasn't bought since 20, then that means he even felt the dip on August 5th was starting to become ridiculous, and he decided to dabble in. So interesting stuff on Nvidia, and if you got in, not too bad for those levels. Again, for someone asking about Dell, that's Jose's main take on Dell is just that the AI server companies are not really exciting stocks to touch, but they give you a signal around demand around the market. And so he's kind of using Dell and SMCI as a proxy to understand what's going on with NVIDIA, but he's not really attracted to those names. JP Morgan, let me show you the report they put out. They said 160. And again, they're saying these numbers because they believe management will get operating margins to go up. So they say, however, it is important for investors to keep in mind that AI server market still remains in the early innings and the revenue opportunity is large, while the margin and profit opportunity is more likely to unfold with the transition in customer adoption driving the revenue opportunity. And then they see a variety of reasons why server TAM and demand will continue to rise, but all of it is contingent on Dell creating positive operating margins, which we don't know if they're going to do that in the next couple quarters or it's going to take some time. But if they do that, then you should have Dell be a bit higher than at least what it is right now, especially after the drawdown. Dell's still up 30% for the dude. SMCI still up 130% for the year after coming down, I think 30-40% in the past month, which is just, it's just a stock that has had absolutely a hell of a run. And now speaking on that that Grok thing, I just tweeted about this. I agree with what's going on with Grok and Twitter. Grok has a competitive advantage that's worth $44 billion. And that $44 billion is X. So the parent company of XAI, or the parent company of Grok, which is XAI, which is the new company Elon started, they have distribution. And that distribution is 500 million users having X. And so when you Grok an image, you can immediately post it onto X. It creates a compounding effect. I've seen thousands of images over the past couple of days of people posting these, random things they put into Grok, and that makes other people want to post. And you're getting all the data from those people posting to be used in order to make better versions of Grok. It is not crazy, I think, to say that XAI one day could become $1 trillion company. It would take a long time, right? But there is a world in which X has a data moat and advantage that is fundamentally differentiated. I was listening to a podcast the other day, and I'm sure a lot of people that are into technology have heard this conundrum that exists in the LLM market. I think we even talked about it a couple months ago, but LLMs have trained on the whole internet, like everything. Like they've scrapped every YouTube video, every article, illegally or legally. They've done everything. So now the conundrum in the LLM space is: do we use LLMs to make more data, meaning the LLM like comes up with new variations of data to then use that data to then train the LLMs to make even better versions of themselves. And the recent studies have shown that like that sucks. That's not going to work. You can't use LLMs to make varied, nuanced versions of stuff they've already trained on, because it ends up just repeating itself in a different way, and you don't get any unique data advantage. So data really is the moat when it comes to these models. That's why with Palantir, it's very important, because Palantir goes into a business and takes the business data, which is confidential, classified, etc., and creates value. Facebook has your personal data and your life data that they can advertise against. So data is everything for these models. X has 500 million people posting every day, and it's different than Facebook. When a news event breaks out, like you're not getting like when Trump had everything happen with the assassination attempt, I didn't go to Facebook, and I tried going to Facebook and I barely saw any posts about it. I went straight to Twitter because they had all the real-time information. Same thing with Reddit, although I don't use Reddit that much, but it has a lot of real-time information. So Facebook's more family and friends, photos, like you go there to connect with your friends. Twitter and X is like real world shit happening right now. And that's what these LLMs are useful for, providing you answers to things that are happening in the status quo. Now, I don't think Grok is as good as GPT. I still think GPT is far and beyond. Their models are just better. However, GPT at some point, it's going to need more data to train on. They're going to have to sign more partnerships with Politico and The Athletic, and they're going to have to dish out more money to content companies. Grok doesn't have to dish out any money for data because the data is there. Palantir after hours 31.18. S&P up a little bit after hours at 553.17. So if all the data is there and the data is compounding, and what happens when X gets 1 billion users and they, they're posting 70 million times an hour? I mean, I think there's just going to be such a big data advantage that's going to make Grok better. Now, again, the model has to be better than what it currently is, because sometimes you get answers that just suck, but it's not like they don't have the data advantage. So I think that definitely is an argument for X, and why X can do very well. And I've also heard XAI is going to be the brains of Optimus. It's going to be the brains of FSD. Like there's so many other angles for XAI to get to 1 trillion versus just like Grok. So I think there's a lot of ways it can be implemented as well. Could take data from Tesla, et cetera. Yeah. What if the Grok is inside of a Tesla and you can talk to it? Like there's so many ways they can play this out. Reddit as well. Yeah, I agree. Reddit as well. Where's Reddit stock, by the way? Let's take a look at that. Reddit as well. 100% agreed on that. Reddit absolutely can do that. Reddit's up about 1% on the day. Reddit already signed a $60 million partnership with Google for training on AI. I think there's more of those partnerships are going to become very important for Reddit and for a lot of these companies that have all this data, and now they need to monetize it in the context of somehow training better models. So that's what we have right now in the context of AI sales. All right, so I want to show you guys some deeper data in the context of the macro. So let me pull this up right here. July retail sales. So we talked about retail sales up this morning, and it was very good. It was up 1%. But here is some additional data. If you're just joining, money market funds added $28 billion in the past week. So we are seeing more money coming into these money market funds. And next week, we'll see if that starts to decrease at all. Okay, so July retail sales. Overall, American consumers spent 3% more on cars, 1.6% more on electronics, 1% on groceries, about a 1% on building mats and gardens, about 0.8% on health and personal care, 0.5% on furniture, 0.3% at restaurant and bars, 0.2% online. They spent less on sporting, hobbies, and music, and then less in department stores like your Macy's, etc., and shopping in those places. So retail and food services seasonally adjusted sales were $709 billion in July 2024. Almost $1 trillion was spent just from the U.S. consumer. This is why everyone wants to sell to Americans, dude. We are the best consumer in the world. Like, we consume, bro. We consume. Like, if you have a new product or service, we are the first to try it out. This is up 1% from June 2024, up 2.7% from July of 2023. So, we are definitely seeing the consumer not really get too scared, at least in the month of July. Now, there is a legitimate bear argument around, hey, wait a second. How much of this is being done on the on credit, right? And how much are people taking out loans and all that stuff? And like, that's a fair question. We are seeing credit go to some of its highest levels, but in general, you're seeing the consumer that's ready to spend, and because the consumer is ready to spend, that's at least quelling some of the fears that people have in the context of a recession. S&P 500 is now down only 2% from its all-time high. So we were down 10% on August 5th. And now, based on the rally we've seen today, it is just 2% away from those all-time highs. Let's get an update on the macro from some people on CNBC, and then we will keep going from there. John says, my wife is keeping those consumer numbers up. Dude, your wife and my mom, we get like an Amazon package, I think at this point every day. Every day. I don't even open it anymore, because if I open it, I know it's something we don't need in the house, but my mom just want it's every day. It's every week, just more and more consumption.
Will you open the door for me to ask you that? I mean,
I don't like to. I'm not like a victory lapper. I think in our second half outlook we got more cautious, and that was probably lucky. But if you look at the data, the consumer is worse. I get today's retail sales data is better. Walmart is a different entity. It's a $600 billion revenue company. That's so I wouldn't use that as like everything else is fine.
no, but what do you mean worse? Worse than what?
The consumer is definitely worse than people thought on July 1st, and it's definitely slowing. I don't need to look farther than restaurants, travel, housing, autos, or Visa to get data points. Yeah, but for every Brinker, there's a cake, or there's another stock.
Sure, but for every McDonald's, there's a Shake Shack.
Sure, but the aggregate consumer in dollars has slowed, for sure. And my view is the world's changed. Every growth manager in the world would say, I use momentum. Every value manager in the world would say, I look at mean reversion. I think it's going to be the opposite for the rest of the year. I think growth managers are going to use mean reversion. They're going to buy these things up when they get to some level below where they peaked before. They're going to sell them. I don't think people are walking in today as a growth manager, big fund, saying, I love Nvidia more than I've ever loved it before, and I think it's blasting to the moon.
But you're not not moved in any sense by the fact that where we were a week ago Monday to where we are today.
No, I think it's been a strong rally.
And the inflation data, and now the economic data. This is not a warped view of what's happening with the consumer. I mean, I understand there are obviously two ends to the consumer.
Sure, you don't get 100 consecutive data points in the same direction. We got a couple positive, but I think there's 60 negative and 40 positive right now. It's not 80 positive, 20 negative. At least that's how I'm looking at it. I think the rally got a little sold off a little hard on some fear, a carry trade, other positioning things. As we kind of get toward where we were, I think people are going to sell some of the growth stocks. I do. I don't think it's straight to the moon. You saw a pretty big rotation in real estate and banks and healthcare services and housing before the sell-off. So I think the market was primed for a little rotation anyway. So I'm not like bared up. I think the rally's great. Our view has been same probability of 10% upside as 10% downside. Got a little more cautious during July because the data got worse. Today's a good day. I agree, but I don't think it means all clear, because I think the earnings estimates for Q4 are too high. So the way institutional...
Let me know if you guys agree with this. So his argument here is that Q4 guidance probably goes lower, and then if the market's forward looking, that may affect stocks in Q3. We still have a whole another quarter to end out the year to get through 2024.
Investors' work is they go on vacation. They go to the Hamptons, they go to the Cape, Nantucket. They come back after Labor Day, and they hear the big conferences, Citi Tech, Morgan Stanley Healthcare, Consumer, and they're going to lower the numbers for Q4 in 2025. So I think you have a pocket of, everything's wonderful here, but the estimates have to come in for Q4. That's my view right now. So I think risk reward is not amazing at the current moment.
Okay. I don't know that, that
might not be out of consensus.
No, I don't know.
Might not be
I don't know, because look, Rick Reeder, Alicia, sat on this desk the other day too, and where he was pretty bullish during the sell-off a week ago Monday. Yeah, he's a little more cautious now too, because of the run that we've had. The fact that the Dow's now above 40,500, the NASDAQ is up 5% week to date. So that makes people like Rick and Adam obviously take pause. What about you?
So look, we did not change our positioning at all, even given the Labor Day, the August 2nd labor force data, or the sell-off on the Japan yen carry trade. We never changed our positioning. I will say there is evidence that the economy is slowing, and the Fed probably has room here to cut 100 basis points because real rates are simply too high, and you're feeling the squeeze at the bottom end of the consumer, and it's moving higher. So there is a bit of a race here for the Fed to get going on this. But having said that, we think the market ends higher into the end of the year. We're confident on earnings through the end of the year. We still like U.S. large cap. I think I'd add to that here, financials always outperform when the Fed cuts into a soft landing. it looks like we're going to get that. So yes, do you move away from large cap tech? Of course you do. So you go into REITs, you go into financials. That looks great too. And I think the cyclicals can be okay here.
So you don't think that earnings estimates for the fourth quarter are too high, like Adam does?
No. I don't think they're too high. I think the earnings estimates actually have been moving higher. And yes, people go on vacation, but they're not brain dead. And so I think it's been a very good year where earnings have come in better than expected, and earnings are moving higher for this year and next year. And if the Fed sticks the landing, we don't see why that can't happen. Now, technically, the S&P went through that 50-day moving average, which was acting like resistance, and went right through it this morning. So I think we're looking good for now. So you say to me, so what could go wrong? Well, what could go wrong is, you've got Jackson Hole, you have other data prints ahead of you. You've got another jobs print in September.
Mm-hmm.
And so that can be bad as well. This morning was about as good as it gets, since everybody had moved the positioning from no recession, Fed's going to stick it, to there's a recession coming. And so now you're just moving back to the middle there, where there's a two-sided risk rather than the one-sided risk that we basically had going into the end of July.
I feel like, we have a little bit of delta in the views between Alicia and Adam. So Joe, you fix it. What do you think?
On Friday, August 2nd, the market expected 50 basis points. Today, the market now expects 25 basis points. We've got this schizophrenia in the eco data that's driving the tape all over the place. 50 basis points probably was indicative of the consumer weakening to a level that we were extremely uncomfortable with. 25 basis points acknowledges that, yes, the consumer is weakening, but maybe not to the extent to where we're all going to ring the alarm bells.
Which is why the Fed futures started pricing in 25 or 50 today, because the retail sales data was good.
I think what has happened since Monday, August 5th, is that, and I think this will be the pattern as we move through the entirety of the year. Anytime there's a correction in the market, we had it in April, you're going to see corporate buybacks. Corporations are going to come in. I think upon reflection, we're going to learn that corporations were aggressively buying back their stock last week. I think the retail community that has been sitting it in cash, anytime you give them a 5% correction, I think they're going to come out of cash and they're going to buy equities. And then I think the last thing is the systematic funds, how to move in a way, and I'm sure Adam understands this well, they had to move in a way that they've never historically had to move. Volatility is measured by the VIX went above 55 last Monday morning. There's only been two other instances when that has occurred. October of 2008, it took 14 months to get back below 20. March of 2020, it happened again. It recovered and got below 20 in November of that year. We got below 20 in 5 days today.
I don't think it's ever moved from like 65 to 15 and where it is now.
5 days never has happened in the history of volatility. Why is that important? Because a lot of these systematic funds that are utilizing volatility as a factor, until the VIX returns to under 20 after being above 55, their equity exposure is never going to be full. Now, within 5 days, they had to return to a full equity exposure. So I think we learned a lot about who's going to come in and support the market. And for long-term investors, I think that's what's mattered, because not as much has changed for long-term investors. You've got a Fed that's not going to get in your way. You've got earnings growth, disinflation, and the innovation, which is supporting semiconductors. So,
I mean, look, those are three unique perspectives. One was a bit more bearish about the consumer weakening and a probability of recession being higher than expected. The other one, the lady on the panel simply felt that earnings growth is going to justify even more momentum, and that you kind of don't fight the trend as we already had a drawdown, right? Like, so for everyone who wants another drawdown, like we had one and it was bad. It just lasted for a short amount of time because earnings are so good, but it's not like we didn't have, like, I think everyone wanted an excuse for a 10% correction. We got it. Lasted for a couple hours, but we got it. And so that happened. And the guy in the middle basically is saying, well, long term, a year from now, equities are probably higher because the consumer is healthy, even if they're not the healthiest, which justifies the rate cut, which is good for equities. But it doesn't mean you have to either raise rates or sound the alarm on dramatically cutting rates, because, again, you don't want to dramatically cut rates because then we're weak. You don't want to dramatically increase rates because then inflation is too high. Again, this is why the soft landing term keeps being thrown around. it seems like maybe there is a chance for somewhat of a soft landing. S&P 500, 553, Palantir after hours, 31.14. Robinhood, 1952, up 4.83% of the day. Robinhood closing above 1950, which was awesome. Nvidia at 122. Cruise lines did great today. Carnival Cruise up 6.64%, 1574. Norwegian was up how much? Norwegian was up what's the ticker for Norwegian? NCLH. They were up 5.64% on the day. And then you had Royal Caribbean that was also up 4.94% on the day. So you saw some of the travel names get some momentum as retail sales were up, and it indicated consumers were going to be good. And again, the cruises had great earnings last month, like incredible earnings. They got sold off on the fear that the consumer is in trouble. The data we got today, along with CPI yesterday, kind of shows maybe the consumer is not in as much trouble as the market feels. Oh, SoFi. Yeah, SoFi had a great day. SoFi was up 5%, 691, ending up 4.54% of the day. Good day for SoFi. Tomorrow's going to be interesting. Tomorrow's a Friday. We had a really good day today. I mean, this was one of the best days in the market this year. Going to be really curious. Dell as well, up 7% of the day. Again, Nvidia up 4%. Curious to see if we keep the gains tomorrow or if the market gives a little bit of it back. I don't think we have any crazy macro data tomorrow. So we should be okay. And if that's all right, then we get into the third week of August, 1 week till Nvidia, and then we round out the 8th trading month of the year, and we get into September. And we'll see what happens there. Can you explain the hype around ASTS? So ASTS operates in space. I don't know everything about the company, but ASTS Space Mobile, they got a big contract, I think, with like T-Mobile the other day. The other day, meaning a couple months ago. This is like, so the reason they're up today, Wall Street Journal is saying that they have an inaugural launch that's for its first ever commercial satellite launch. The company is developing a space-based cellular network. Said after the bell on Thursday, its first 5 commercial satellites are on track to launch next month and serve as the largest ever communications arrays to be deployed commercially in low Earth orbit. And they got an upgrade, I think, to $30 today or $26. So there you go. That is at least the hype for right now, and we'll see how that launch goes. I see you guys talking in the chat that space may be the next really big industry. I kind of agree. I mean, space is a big commercial TAM. We need more growth. We need to offshore a lot of the dirty manufacturing in the United States. And if we could do, or just globally, if we could do that in space, that would be way better. If we could dump some of our trash into space, that would be good. And you have to get rockets to go up into the sky and do all that stuff. You have to have broadband connectivity. That's where satellite companies come in. That's where Satellogic, ASTS, Starlink comes in. And then you've got operating systems to manage all of that, which is where Palantir comes in, right? And their contracts with Voyager Space and Starlab and the stuff they're doing in space as well. So I think that's kind of how space is playing out. Rocket Lab, obviously. SpaceX's IPO is probably going to be, well, SpaceX is already valued at $200 billion, right? I don't think any company is IPO'd above $200 billion. I think Alibaba IPO market cap. I think Alibaba was the, so Alibaba IPO'd at $231 billion. They were the largest IPO besides Saudi Aramco that IPO'd at $1 trillion. So it was Alibaba. So I think SpaceX easily beats that, dude. I think in the next decade, SpaceX becomes the first, at least $400 billion company that goes public. It's going to be more than 231 because it's already worth that. And again, SpaceX is growing, dude. They just got $1 billion contract from NASA a month ago. I think it was like 834 million. Like, they're actually growing as well. So that's going to be an exciting one. And you're going to have a lot of people, obviously, that love Elon in the Tesla world, and they're not going to be afraid to buy some SpaceX shares because they're just going to believe that Elon's going to keep this thing going. So I think that's going to be one of the more exciting IPOs as well over the next few years. Rocket Lab will definitely pump when SpaceX IPOs. That's correct. It will. Jose in the chat says the only thing is AI is so much than just LLMs. AI equals robotics, autonomous driving, big improvements in healthcare, medicine. I think AI will have so much more before space. I agree. And I was listening to some stuff today. I think healthcare. I really think healthcare. I talked about it on Tuesday with the Palantir clip, but I think healthcare is going to be the one of the biggest beneficiaries of AI. It's just so obvious what it can do in healthcare, and it's so obvious why the hospitals and the medical institutions and the academic research institutions would realize the drug discovery, pharmaceutical companies would realize how important it is to implement that immediately. So I think healthcare is going to be a big one that benefits from AI. And again, this is the thing. Like, this is why when the bears say AI is trash, you have to ask yourself, do you not believe robotics is real? Do you not believe self-driving is real? Do you not believe gains in efficiencies and drug discovery are real? And you could say it's a little overhyped at the moment and that it's not showing any real results yet. But to say you don't believe in it over the next decade, given all the evidence we have. And I like what Jose said as well, that Palantir is showing the use case of a lot of these models. Like, ChatGPT doesn't mean anything. Gemini doesn't mean anything, but it means a lot when you plug it into AIP, and then AIP delivers value to a Fortune 500 company, and they save $200 million in operating expenses because they're more efficient. Like, that's when it means a lot, right? And so I think we'll have to see kind of how it plays out over the long term, but it does seem like it's going to do really strong. Where did Emit get 200 million X users? They only have 50 million. No, X has 500 million users. I think you're referring to the dailies. They have 243 million daily active users. They have 500 million monthly. They do not have 50 million. They have 500. They confirmed that last month. But it'll be about 500 million users. And I getting to 1 billion. The thing about X, my bear case on X has always been, people don't like tweeting because people don't know what to say. Right? Like when you're posting on Instagram, anyone can post like their breakfast, right? And then your friends see it and then you comment with your friends. So there's that social network. YouTube, everyone's watching video. On Twitter, you have to like come up with like words that get people's attention. And that's very difficult to do because Twitter still is text first. So I think Twitter will grow, but to get to 1 billion, they've got to really figure out how to expand the go-to-market, because it's just hard for the average person to get on Twitter and then stay engaged. Because if you're not tweeting all the time, if you're just scrolling through people's tweets, then the creator incentive side is not as strong either. So I think Twitter has a lot of work to do to get to 1 billion users, but if they do, I think they're gonna have all the data that's important to train a lot of these models. Cool. So that's what we have here. Chris is talking about space-based communication. That should enable AI. Yeah, I agree. And global telecommunication, Starlink is going to be a massive, massive business. I mean, on the cruise lines, we're already seeing Starlink give people access to the internet in places where they historically didn't have it. Jose says personalized medicines, drug discovery will be a huge market. I just need to find a drug discovery person to tell me where to look. Yeah, and Palantir's partnership with Novartis is something that I dived into about a year ago. I should dive deeper into see what exactly they're doing with them for drug discovery, because we haven't heard much about that since then. We did have the CEO of Novartis come on CNBC and publicly talk about the partnership, but it's been a while. So I don't know any dedicated drug discovery companies outside of like not just the pharmaceutical ones that are obviously, discovering drugs, but like a company that makes a platform that uniquely is something that Pfizer would buy, and pay a lot of money per year to have access to. I would imagine it has to be some type of tech company. I think Palantir offers that, but that space is going to be massive. And if we start solving a lot of the issues that exist, across the world, you would imagine that we're probably going to have more diseases that break out over time, and we're going to need to be able to solve things easily and compile a lot of data to do that. Wow, Starbucks ended up 1% on the day. Look at that. Starbucks ended green. Starbucks actually ended green. They were down for the day. You guys are putting some tickers in the chat. Huma, Aloe, Bava. All right, so I'll put those on my list and we'll take a look at that, because I think that's something you definitely to think about when it comes to drug discovery and AI. It's not something to ignore if we think that's one of the biggest use cases for it. Tempest AI. Yeah, so this is the one Kathy's buying. I said I was going to look into this. I have not looked into it yet. Let's go to the website right now, dude. I have not. This is Kathy's buying this thing like crazy. It's a AI hospital healthcare company, $7 billion market cap. All right, so here's the website. This is my first time looking at it. AI-enabled precision medicine, bringing the power of data and AI to healthcare. So kind of sounding like what we just talked about right now. Discover our innovative technology, algorithmic models connected to our arrays to provide additional insights. See, so when I see this stuff, I want to know, okay, are they creating like a data analytics layer to connect to your data and then help you like make better insights? Because that kind of just sounds like Palantir to me, right? Like a segment of Palantir. Or is there something even deeper there that is constructing how these guys are thinking of their go-to-market when it comes to healthcare? So this is stuff to do research on, right? Like I've not done a lot of research on this, but there's just so much to do research on, dude. There's so much to learn. This is not going to be a boring decade. This is going to be one of the most exciting decades. And there's going to be so many exciting ways that this stuff ends up playing out. It'll be fun. It'll be really, really fun to see what ends up happening. Can you talk about how the power grid will handle all this energy demand? So I'm going to have Steve on the show tomorrow. He's going to talk about this. Steve's been looking at this new stock. that's been informing him that the energy demand is going to be dramatically high. The data center demand in context of energy is going to be just like dramatically high isn't even the right vocabulary, dude. Like it is going to be ridiculous how much energy we have to use. And so Steve has some ideas on how to play energy and what energy will look like. And tomorrow on the show, he'll disclose some of those ideas. He texted me today. My phone's over there, but he texted me with a stock chart of Amazon and his timing of his Amazon article. He published it, I think, when it was at $150. He was like, I kind of nailed the bottom, bro. I was like, yeah, you got it. You nailed the bottom. He'll be on the close. So what time? Basically 4 o'clock. He'll be on at 4 o'clock. TJ will be on in the morning. We'll talk about options. TJ just texted me. We have a ton of Nvidia puts. Let me show you guys the picture. My iPad's actually charged. Aren't you guys proud of me? So here are the Nvidia puts that we're up on. We have they're the two in the middle. So 105 put on August 30th. We have 10 of those, and then the 117 put for August 30th. Both of those are up about 70%. So if Nvidia's green tomorrow, maybe we close that out. That would free up about 100K, a little bit more than 100K worth of capital. We can put that somewhere else. We rolled the Robinhood ones as well. So we rolled the $20 puts we had on Robinhood, and we collected 4,400 to, I think, 2 weeks out. So that one, we got paid to roll that. And then the Nvidia ones were underwater when Nvidia went to 80. So in the past 2 weeks, a lot of those puts came back. TJ bought another 200 shares of Nvidia as well. And so tomorrow we'll go deeper into what changes he made on the public portfolio. He also sold covered calls on SoFi. That's not part of our portfolio, but I saw he did that today. And he sold $7 covered calls on SoFi. Now SoFi ended up running, which is what happens. He was like, whenever I sell the covered calls, they end up running. But SoFi getting a little bit closer to $7. Did Meet Kevin make any moves today? Let's see. Let's see if Meet Kevin made any moves. We know he bought Mortgage's stuff yesterday. No, nothing today. Today's August 14th. Yeah, or today's August 15th. Yeah, nothing today. So pretty much selling out of some of the tech and going into more of the mortgage plays. McDonald's up 5% after the hours. Let's see. Is there a reason why it's up 5%? Did they announce a space telecommunication partnership or something? No, I don't see anything. I don't see anything for Mickey D's. ABCL. Yeah, I like ABCL. Arnie has done a lot of due diligence on ABCL. ABCL is just one you hold for a long time, dude. It's just one you hold for a very long time. It's not up 5% after hours. Or at least Weeble's not showing McDonald's is down a little bit after hours. So you might see a glitch on Google Finance. Google Finance is not the best, dude. It glitches out a lot. McDonald's flat after hours. ABCL is really cool. It's just, again, it's one of those it's going to take time, dude. Even Arnie knows like this is going to take years. I think Peter Thiel, I don't think he's on the board of directors anymore. He was on the board of directors. I think he initially funded it. I don't think he's part of it anymore, though. I'm not sure if he's still part of it as well. It's on Robinhood. Let me check on Robinhood. McDonald's MCD. Yeah, it says it's up. That might be a glitch on Robinhood then. It might be a glitch on Robinhood. That's weird. Let me check. Maybe it's Weeble that's wrong. Yeah, no, that's Robinhood's glitch. It's because it's flat after hours on Google. So it's probably a bug. It's probably a glitch. What'll be interesting today is to see if we get overnight trading again. I think Robinhood's bringing it back today. They said on Thursday. Today's Thursday. So I think we get overnight trading back. And so people will be able to trade again at 8 p.m. And so we'll see if it ends up working. Derek just commented under my Grok post. This guy, bro. I said Grok has a $44 billion advantage over ChatGPT, blah, 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 blah. He said exactly why I invested in XAI and you passed. Dude, this guy thinks I'm made of money like him. Like he messaged me when I was at DC for the CARP event, for the Palantir event. He calls me one night. He's like, you want to invest in XAI? I was like, I have no money. He was like, sucks to suck. I'm about to put in a ton of money in XAI. And I was like, all right, dude, I don't have any fucking money. So enjoy. But, yeah, he put in some money in XAI. I mean, and to be honest, dude, like I would love to invest in XAI, but I'd rather, you're not going to get liquidity on that for a while, bro. Like I already don't have liquidity on $35,000 of my money. 25,000 is figure. I put 10,000 in another one. I want to tell you guys, it's another robotics company, but I messaged them the other day and I was like, yo, can I announce this already? Like, it's been like 3 months. And they're like, no, it's still like the press release is not out yet. So I can't say yet, but it's another robotics company. And I put 10,000 in them. I'm not going to see that money for a long time, dude. And so if I put more money in XAI, as cool of an investment it would be, like I wouldn't see it for a long time. So I kind of would rather have that money still there. But I think XAI is going to be big, bro. I think it's going to be big. And I think Grok is starting to prove the advantage it has right now. And it makes sense how he was able to raise that money too. Like Elon raised $6 billion in like 2 weeks, dude. Because everyone realized, all right, like Elon's going to figure this shit out. There's going to be a lot of data. They're going to take advantage of it. And they're going to do what they have to do. Amid, if you had a buy limit order and a stock glitch touching your price, would your order fill? I've heard stories of this stuff happening, but it's never happened to me. Sometimes the glitch is so quick that like the order doesn't get triggered. Like you kind of need a good like minute sometimes for the order to get triggered. So I don't know. Sometimes it happens. It definitely has happened. It hasn't happened for me, but it doesn't always play out. Yeah, Figure is the one you guys know about, but there's another one that I put in, not because I believe that much in it, but because the valuation that they offered was really, really exciting. And I called, who was the guy I called? Chris Camillo, the guy from Dumb Money. I was on the phone with him the day before I sent the money. And I was like, because he put in a lot of money. So he put in like a shit ton of money. And so I called him and I was like, yo, is this like legit? Like, this is a good deal? And he was like, dude, like the valuation's so stupid that like, even if they don't become the biggest robotics company, they're going to catch a bid eventually over time. And, you know, team's executing really well. So I was like, all right, let's put 10 grand there. So if I put that 10 grand in Palantir, that would have been at probably like $21 at the time, but we put it there. So we'll see what happens. But yeah, it's nice having liquidity sometimes because with private investments, you just don't see the money for a while. You can invest in XAI via Ron Barron funds. Yeah. A lot of these funds, Kathy, all these guys, a lot of them loaded up on XAI and Figure, dude. I mean, they've been giving the money out there. Can you at least tell us the valuation? I think it was a 250 million cap they did. It wasn't even. So that's our post money cap. We got 250 million, but that's not the actual valuation. But that's why it was such a good deal. Because I was like, dude, if fucking Optimus is going to be worth 25 trillion one day, maybe Figure is worth a couple $100 billion. This company is going to get, at least 3 to 4 billion, and I'm investing at 250 million. So I was like, all right, this is not the craziest story. I mean, this doesn't have to be the craziest growth story to still get a pretty decent return. So it's kind of like a small cap, right? It's literally 250 million is like a small cap. So that's what also got me to be like, that's not the worst idea. Are you into Bitcoin mining companies? I had CleanSpark in the beginning of the year. I just again, the thing about the Bitcoin miners is you have to believe Bitcoin's going to go up for them to get any benefit, and they don't move outside of Bitcoin. So I kind of sold it and I made like $1,000 on it, and I just put it into Robinhood because I started believing more in like the thesis that Robinhood was executing on versus just a proxy play to Bitcoin. So I still think they're fine. I don't agree with Jason that like the miners are just going to do horrible. I think if Bitcoin goes up, the miners will go up. It's just the longer Bitcoin stays down, and today it didn't realize that today was a good day, not a bad day, and it's still down 2%. Then the longer the miners don't get any momentum, right? Especially after the halving event, because now the cost doubles to mine the Bitcoin, or their profits get cut in half, even if their costs stay the same, which effectively means it doubles because they don't have because Bitcoin's not going up after the halving event. At least it hasn't so far. So Bitcoin's got to go up for the miners to print. But if you believe in Bitcoin and you think it eventually will, then I think the miners also eventually will go up over some time. Would you put $30,000 into Robinhood at the current price? Look, I like Robinhood under 25. I've been saying that for a while. It's such a specific question. Like if you need that 30,000 tomorrow and that 30,000 turns into 23,000 over the next 2 months because we end up into a recession, like no, right? If you really like need that money, then no. But I like Robinhood under 25, and I really liked it at 15. I think I was pretty obvious about how much I liked it at 17, and now it's at 19.55. I still like it here. I still think it's deeply undervalued. I just now it's run a little bit, so it might take some time, just capitulate. But yeah, I like it under 25. I really do. And I'm not saying that because I like it. Deutsche Bank agrees with me. Wolf Research agrees with me. Bank of America agrees. Like, I read a lot of these reports and I try to like condense, am I thinking what they're thinking? Because sometimes there is a disconnect between, how I'm seeing it and how they're seeing it. And I like the institutional analysts because they're talking to the big guys and they know how the big guys think about growth and risk reward and all that stuff. And so I just want to make sure our theses are aligned, especially on a company that's as small as Robin, like a $15 billion company. Like there shouldn't be that much divergence of thought. There's a bear case and a bull case. Like, that's it. When you think about Nvidia and Google, you have like 1,000 different opinions, but like on Robin, it should be like, are you bearish or bullish? And what's the perspective? And it seems like most of the analysts, and then I read the ones that are bearish. I'm like, oh, well, it's contingent on Bitcoin. I'm like, okay, so you just don't know the business then. Like, that's not a good, it's like, that's not a good, oh, they're going to suffer when interest rates come down. It's like, okay, so you just didn't listen to management and what they said about interest rates and what it means for Robinhood when interest rates come down. So like the bear cases from the institutional side, I don't think they're that strong. And the bull cases start to make a lot of sense with the numbers and the growth that we're seeing as well. What's your thesis on Reddit? I think they're cheap. I think I don't have a position right now, but at $9 billion market cap, now profitable, or I think they're going to become profitable soon, and real-time data for AI. Plus, they had their largest surge in active users last quarter. So they had a really good quarter. I think I like Reddit. I personally am not that excited to own it, but I think it's not a horrible opportunity in this market. It is a growth stock, though, and they need to prove continued growth. So the same risks apply with any growth stock, right? Like, they have to continue putting up that growth. I was actually on the phone with Derek today, and I asked him a question because you guys know he's working on his new startup, and I said, when's the first time in your life you experienced hyper growth? Like growth where you are building something, company, brand, whatever it is, and it's just taking off, like real growth. Because as I'm analyzing Robinhood and I'm seeing 40% growth quarter, every single quarter, the 2 quarters in a row, maybe third quarter we get another 40% quarter. I'm like thinking, like, what is Vlad feeling right now? And I know he's experienced hyper growth in 2020 when shit went crazy, but this is like real serious growth, right? Like real growth, and how are you reconciling all that stuff? And Derek told me, like, in the 90s when he was starting his first internet companies, they started getting like hundreds of thousands of clicks a day based on their website conversions and all that stuff, and it was like crazy hyper growth, and that's what allowed him to get some of his companies sold and make a lot of money from that. And so when you're in hypergrowth phase, it's a very unique position to be in, where you're kind of reconciling all the growth that's happening and you're trying to figure out how to maintain the momentum. And I think that's what's happening now in a variety of sectors with AI, right? Like Robinhood is one argument where they're seeing a lot of growth and they're trying to figure out how do they maintain that. The analysts are trying to figure out how do they maintain that. And you're looking at the arguments on both sides. You look at Nvidia. Nvidia is the classic story of hypergrowth. I mean, growing revenues almost 300% year over year because data centers are expanding internationally, because every single business in the world, whether it's a mom and pop shop or whether it's United Airlines, needs AI, meaning they need implementation of models and software, and Nvidia is the epicenter for all of that. That is massive hypergrowth. So I think the point is, when you're in hypergrowth, something has to happen to stop hypergrowth. So like something macro has to happen. Something has to happen with demand, maybe supply, like when COVID, we had all these bottlenecks with supply, which stopped a lot of growth, and we had massive unemployment. Like, there has to be something that breaks in the broader infrastructure of the economy, much less of the sector you're in this case, chips, aka, an invasion of Taiwan, that would break the growth story, that stops hyperscaling. And in the context of AI, I think every day we get more evidence that like hyperscaling is not slowing down. The CapEx is definitely not slowing down by the hyperscalers. And the demand for GPUs and models and training on all the various use cases of AI is likely not slowing down either. So if we're in a period of hypergrowth as a broader human race, and we've had periods of hypergrowth over time, industrial revolution, the internet in 2000, when that's, we've had obviously many periods where humanity as a whole grows in a hypergrowth way. We're not doing that with population right now, which is part of the problem, but we are doing that with technology. It is going to be curious to see what stops that. There will be drawdowns in that hypergrowth period for a variety of reasons, like Japan raising rates. But I wonder what actually stops it. What really stops it. And maybe it doesn't stop for a while. And maybe that growth continues to continue. and continue to get even larger than the growth we have right now. Did Derek get in early with SpaceX? I think so. Dude, I know a lot of people that have access to SpaceX. Like a lot of people. Like I have a lot of friends that have Sachin. You guys know him, part of the channel. He's been on Palantir Weekly many times. Sachin, I think he's up like 5x on. I think his average is like $15 on SpaceX. SpaceX has been one of the more liquid startups to get access to because they've done so many secondary rounds. But I'm not in it. Edwin says, how do you get into private companies? I feel like companies are staying private a lot longer before IPO. Yeah, I agree. We're not seeing a lot of deals. And the reason we're not seeing a lot of deals is because there's still not that much liquidity to justify. Like 2021, again, interest rates were zero. There was liquidity. People like, sometimes people forget when interest rates go to zero, you can't get yield, meaning a return on your capital. And I didn't understand this at the time, but now I'm much wiser with understanding this. You can't get yield outside of anything that stays risk-free. So it has to be in something that grows. This is why Ginkgo Bioworks was worth like 15 billion bucks in 2021, because there was nowhere giving you, forget 5.5% on your money to do nothing, but like 1% on your money to do nothing. So you had to take a chance on Ginkgo Bioworks, right? And so the valuations get inflated. This is why the market wants a rate cut, because when the rates come down, theoretically, asset prices should go up as more money moves into equities. So, those levels of valuation, I think, are very important to understand with these companies. Now, if these companies can't get those valuations because rates are still too high, well, they're not going to go public. If Databricks can't get $100 billion valuation in the public markets, they're just going to say, screw it. Why do we report to investors every single quarter and show them our results if like we're not going to be rewarded in a meaningful way? So I think until we get at least 100 bips of rate cuts, which maybe takes us into mid 2025, we're not really going to see IPOs happening. I mean, look at Pershing Square, Bill Ackman. He couldn't even IPO his fund, even though he has a massive following, because there wasn't enough demand. Why would you put money into Bill Ackman's fund if you could put it in a money market, right? Like there has to be a really compelling argument to actually do that. So I think in general, to get access to private companies, you just have to know people. There's also a platform called Hive, Hiive. This is one where you can just buy secondary shares literally by yourself. You can just sign up and you're going to have to pay a little bit of a premium. But if you really want to get into OpenAI, this website immediately allows you the opportunity to get it. And then there's obviously startup ETFs like the ARK ETF, but I don't like those because I just think there's too much junk in the ETFs and I'd rather just have exposure to the equity itself. So that's what we have right now. AMAT's down 3% in the after hours. Okay, so yeah, again, it was up a lot this year, so that's fine. There's still decent earnings. It was up 5% of the day, so not a bad earnings for AMAT. Didn't you have a startup? I didn't know you back then, but what was your experience with that? Yeah, I had a startup. A lot of you guys probably remember it. Some of you guys don't because you're new to the channel. We cut it down in December of 2023. And, the main reason for that was, honestly, one of the reasons was AI. I mean, like AI was expanding so quickly that it was very difficult to see a technology company scaling without a definitive moat in the context of AI. So to me, I was actually talking about this with Ardashir the other day. The guy sent the 33-minute voice note to, because he was there during that time. And it's about making a meaningful pivot in which you can experience hypergrowth. So it's interesting you bring this up, right? Because with a startup that I tried to create, I couldn't get to hypergrowth. Like we just could not get to massive growth. And it is what it is, right? You try to build something, you don't see it's going to grow, and then you do the responsible thing, which is like move on and don't waste more time on it. With social media and content, it's been a hypergrowth year, dude. It's been a really big hypergrowth year, and like comparing the feeling of not being in hypergrowth versus being in like hypergrowth, like every day you're seeing numbers go up and up and up, and you're seeing more momentum, and you're seeing like more opportunities because of that momentum. That's a whole different mindset to be in. And that's actually why I was talking to Derek about it today, about how do you feel about hypergrowth? Because when you experience hypergrowth for the first time, like when you're really building something and shit's like growing, whether it's a laundromat or whether it's a YouTube channel, it's exciting. But the number one thing, the literal number one thing that you think about is, how do I maintain that momentum? How do I like not let it go? How do I constantly maintain that momentum at a higher level? Because the number one thing, it's like, I've been a rich man and I've been a poor man, and I choose rich every time. It's like I've gone through no growth trying to build something, and I've seen a lot of growth, and I pick growth every time. I pick growth over everything, dude. Like if you're a builder, if you're ambitious, which I tend to consider myself to be more ambitious. If you're a risk taker, and you start to see the risks actually match the reward when it comes to growth, like you just never want to give that up. So what lessons did you learn? I think lessons, quite frankly, are betting on your core competencies. And I think like, I think it's the same thing with investing. Like if I don't know about AMAT, so I'm not investing in applied materials. Like I don't know, I don't know. So, right. ASTS, it's going up 50%. I'm not going to buy them because I have no idea what satellite communication industry looks like. Right. But I think I understand enough about Robinhood. I've been using it for a while. I think I understand enough about Palantir. I made fucking 3,000 videos on it. And so that's where my core competency lies. I think it's also the same when you're building something. When you are building a company, if your core competency is not in the thing that the company is, or the product or service that the company is trying to provide, then it's just going to be tougher to succeed. It's not impossible. It's just tougher. So to me, I think my core competency is obviously in communication. The people were joking about how do you talk into a microphone for 33 minutes and send it to your friend as a voice note. To me, it's like, dude, 33 minutes could have been 3 hours. Like I talk. I know how to talk. I like talking. I enjoy talking. I don't know how to say a lot of words in the English language, which is why I come up with Amitisms. But at the end of the day, I like connecting ideas and putting them together. So if I know how to talk and I know how to communicate, then the question becomes, how do you bet on your core competency and grow that at a hyper scale? And I think this year has been basically me figuring out what am I really good at, which is communication. How do I get better at that? And then how do you navigate that around growth? And there's so many other elements to grow outside of just like betting on something you're good at. But you're like not broken from the start. Like if you start doing something where you're bound to fail because you're just not I'm like, if I try to be in the NBA, I'm bound to fail. Like I'm not tall, right? Like it's not going to work. I have a mean three-point shot though. I have a good jumper, but I'm not tall, so it's not going to work. So you're bound to fail. If you start something where you're bound to fail, it's just an uphill battle that you're going to lose. But if you start something where you're pretty good at the baseline level of it, which means if you want to be a YouTuber, like you got to know how to be able to talk, right? Even though I hay in the needle sack, like you get Estee Lauder, like you get my point, but you have to be able to know at the end of the day how to talk, because if you can talk, then you can at least begin the process of like making videos and putting out content. And then if you're just like super consistent about it, and you don't fucking stop, you could potentially hyperscale that. So I think it's out of its core. If you're building anything in life, it's about betting on your core strengths. And really, I'm getting obsessed with this concept of hypergrowth because I think the biggest things in the world, everyone who does anything super monumental in life, like really, really big, and you really make a name for yourself, you have to go through a period of hypergrowth. And maybe that hypergrowth takes years. It doesn't happen overnight, but you do something where more people know who you are. More people invest in your product and service. More people are consuming your content. More people care about your ideas. More people are investing. I mean, think about Karp, dude. Karp must be seeing his level of hypergrowth. Karp must be looking at Palantir at $70 billion and being like, holy fuck, dude. I was here when this company was worth zero. And it took 20 years to get to 70 billion. But I mean, how many people have built, forget a $70 billion company, a $100 million company, right? And Palantir up 3x in 4 years. That's pretty hypergrowth to me, right? In terms of the stock price. And so I think to do anything really, 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 really big, you've got to go through that period where you consolidate a moat around growth and then you scale it dramatically, just like Jensen as well. Bruni says, Amit, it's a needle in a haystack. Dude, I had a bunch of people comment on the video yesterday and they said, hey, Amit, I think you messed up when you said this phrase, it's a needle in a haystack. And I just wanted to comment back, be like, oh, no, I think you messed up. I'm pretty sure it's hay in the needle. Like, some people just didn't get the joke. But yeah, I think that's the most exciting thing about hypergrowth. It's like you're in that moment, and then you just never want to let it end when you're in the moment. And I think that's the thing about building something you're good at. You don't want it to end when you see a hint of growth, which is why, like, when I'm going to India, I really want to see my family, but it's going to suck that growth is going to probably slow down because we can't do the market close. Like, there's just no way we're going to do the market close for 2 weeks. And that's a big deal to me because that means we're not going to grow as much, right? I'm probably not going to be able to post on Twitter as much when I'm in India because I'm going to be in India, right? It's just going to be tough to like get out my tweets. So there's certain moments where you sacrifice hyper growth for more important things like family. But at the end of the day, it's like, it's an obsession of growth. Like yesterday, dude. Oh, yesterday, I got to show you guys this picture. Hold on, let me show you this picture. So yesterday, I had, we streamed for like 3 hours or whatever. The market closed. We did Technical Tuesday. I had to do so much shit. My mom called me outside, right? And she wanted me to pick out some stuff from the garden, right? Mario says, fine, I'll do the market close for you. Please. We need someone to do the market close. Dude, maybe I should give the channel to someone to do the market close every day. Who do you think should I give it to Steve? Could you imagine if Steve does the market? Dude, Steve will see one comment and get pissed off. And for the next 30 minutes, we'll try to figure out how to roast that comment. It would be hilarious. It would be hilarious. Anyway, I'm outside yesterday and we have a garden, right? And so my mom asks me to pick some stuff out from the garden. And so this is what I pick out. This is cool, right? These are real jalapenos that we grew in the garden, like peppers, like real stuff, right? And so while I'm picking out this stuff, I'm on my phone because although we just ended like a 4-hour stream, I have to tweet, I have to get out some stuff, right? So I'm like still preoccupied. I'm not like taking in the beauty of this. B, I realize I don't care about this, dude. This is something that gives my mom profound happiness. Like my mom, this is like a baby, raising a baby again to my mom, like seeing this thing go from nothing into this big jalapeno. To me, I just wanted to pick the jalapeno and get it over with so I could move on. And like, it was taking a little too long and I was getting a little annoyed. I was like, dude, I gotta go. Like, I don't care about picking these jalapenos. And so I say that to say I'm not proud of that. And I know a lot of people are like, oh, well, it's a little too toxic. You're a little too obsessed. I get it. But this is when it comes down to, do you want to actually engage in hypergrowth? Because when you engage in hypergrowth, even doing little shit like this will be annoying. You're not going to find the beauty of picking peppers and jalapenos or whatever. You're going to just want to keep growing. And with Twitter and YouTube, it's even more toxic because there's no end to growth. Like you could be tweeting all day. I could be streaming for the next 4 hours. I don't know how many of you will be left after 4 hours, but if there's at least 2 people, I'll be talking. All I need is one person to listen, dude. I proved that with the 33-minute voice note. All I need is one mother effer to listen, and I will talk. Which is why someone asked, why do you think you're so good at talking? It's because I just need one person to listen. There's a little bit of narcissism there, but not in a negative way. Like narcissism, people can be narcissistic, and that can get really toxic, and I've dealt with those people. There's another form of narcissism that just you like creating, and you want to create, and you're a little bit of an attention whore and you enjoy the process of it's a selfless form of narcissism because at the end of the day, you're creating for other people and you want to entertain other people and inform other people and give value to other people. But at the same time, you like being the guy that gets to do the thing for other people. So there's a sort of nuanced, paradoxical element to that there. But at the end of the day, if you're in hypergrowth, even the smallest of things like picking things out of the garden are going to annoy you because you're going to just want to keep growing. The point being, it's so hard to grow anything in life, anything, startup, YouTube channel. And I've failed at many, many things in my life. Even Derek on the phone today, he was like, dude, the amount of things that I fucking failed at in my 20s and 30s. Like, Derek, he's a success now, but he's gone through a lot of shit in his life as well. He had a lot of money, lost all of it in the .com crash, had to rebuild his wealth. It's so hard to grow anything that when you finally get a whiff of growth, you just don't want to let it stop ever. Ever, ever, ever. You do not want to let it stop because you never know if you're going to get it again, dude. You never know if you're going to get the opportunity again. I have friends that hit me up now and they're like, they're trying to do social media and I don't even know how to explain to them the level of obsession I have with growth and with like maintaining my analytics and understanding my numbers and providing value and like, because they're never going to get it, dude. They're never going to be that obsessed. And so like it's already like, I don't even feel like talking to them because I'm like, you're not even going to be able to try. Like, and because honestly, if you were actually trying, you wouldn't be asking me for advice. You would just be doing it. That's like the harsh reality, And if you have some little pointers or something you need, so because I didn't ask anyone for advice, dude. You don't fucking advice. You don't get advice when you're trying to grow something, bro. You're just like in the moment. And then you have mentors and people that help. But from 0 to 1, no one told me that making Palantir videos in 2021 would create a moat around my channel that is really hard to disrupt because there just wouldn't be that many people that could break down the company. And I wasn't even the best analyst. But like that was all a learning process of me figuring that shit out and like just doing it. A lot of it just comes from like just fucking jumping in the tornado and seeing what happens. And so when you get to that level of growth, you don't want to go back and you just want to be obsessed with it. And then you realize why other people aren't growing. And then you have such a big moat because other people can't penetrate that because they're not going to ever try as hard or they're not ever going to go from that 0 to 1 moment. So now that you have a monopoly, kind of like Google, right? And no one's going to really beat us in search. So let's just keep building on this monopoly. And then you really start to see the money exacerbate from that because now you get so much value accruing. Money is just value coming in one place. And when you're an individual brand, startup, company, whatever, you have all this value coming in one place. There will be money. There will be opportunities. There will be many good things. but you got to work your ass off and be committed to maintaining that hyper growth. And so that is why I think it's important to care about growth. Corey says, how would you explain to someone to be a better speaker? You know, I had a whole consulting firm on, I actually coach still 3 kids in debate on public speaking. I think speaking, if I had to sum it up, it comes down to connecting ideas in a way that makes it interesting enough for people to listen to them. And what that means is when you connect an idea, like in the stock market, how can you attach an analogy, a metaphor, a breakdown of the idea in a way that gets people to understand what you're trying to say, but then to an extent entertained, which means it doesn't have to be funny, but there's a value in the intonation of your voice and the inflection of your voice and the potential humor of the actual argument you're trying to make that gets people to care about you as a communicator. And that's hard to do. It's not easy. And that's why Karp is very special. You know, Karp basically talking about masturbation by saying self-pleasuring. Right. And like, it's just hilarious. Dude. Like, what fucking CEO does that? Well, Alex Karp does. Karp talking about these very intricate and complex ideas of Western values intersecting with the role of democracy and the sovereignty of the individual and like trying to put all that together. Honestly, I understand a lot of the stuff he's saying because I studied a lot of the books, all the shit he read in his philosophy PhD. I didn't read all those books, but a lot of those authors like Hegel and Marx and a variety of other people they mentioned, Rousseau. I read those authors in high school and college when I was doing debate and I was taking philosophy classes. So already when he's talking about that stuff, it's so impressive to me because I'm like, dude, a lot of people don't understand what the fuck you're saying, dude. This is not easy stuff to comprehend. I remember how much work I had to go through in high school to reconcile these ideas and then be able to effectively debate them on the debate team. And so when you have a mixture of someone who's so intellectual, but then someone who's so just like raw funny and talking about masturbating live through some intellectual, you know, a simile of that concept. It's just this powerhouse of communication and you can't stop listening. Right. And that's what I think you need to have to become a good communicator. And you learn it over time. It's not, you don't have to be born with it. You know, like I think anyone can learn it. I've coached many people and I've taught them how to do it. But I think in general, there has to be a little bit of passion inside that wants to, you want to be passionate enough to get ideas out into the world. And then you learn the mechanics of it. But if you don't have that internal desire to like get your ideas out there, you're never going to really be a great communicator because you're just not going to care enough about communicating. Exactly. See, like me saying liquidating my balls. That is a form of effective public speaking because it got people to pay attention. Now, did I know that saying that meant the opposite of what I was trying to say? No. But at the end of the day, it got people's attention, which is important. And it was kind of a fire line though. Liquidate my balls. I really thought of that moment, dude. Because I was texting Chad. I was like, dude, Chad, because fucking Chad tweets about 4 deployed engineers and all this shit at Palantir. I was like, dude, Chad, every day I keep saying the word deploy. Like I catch myself saying deploy in random places. And so liquidate, because it's another like investment term, because we talk about liquidity and stuff. I started saying the word liquidate. And then that day I was like, all right, guys, I got to go pee. So in my head, I'm like, all right, I'm going to, I didn't pre-plan this in my head. It just popped out. I was like, oh, I'm going to go liquidate my balls. Now, is it a little raunchy to say balls? Yes. But the word liquidate kind of, contextualizes the phrase. The problem is I didn't know that there's a difference between balls and bladder. And so that's what ended up making it humorous, laughing at me more than laughing with me. But nonetheless, it was a phrase that was good enough to get people's attention. So at the end of the day, you got to be able to care about getting people's attention and genuinely care about providing value and not do it in a deceiving way either, because that was an honest mistake, right? Liquidating my balls, like that was just, it was funny because it was honest and it was authentic. If you like purposefully try to make these mistakes, that's why I keep trying to tell you guys when I don't know how to say words, I'm not doing it on purpose to play some type of character that's humorous. I genuinely cannot say certain words. When I see Estee Ladar, I don't know how to say the Ladar part. I still don't know how to fucking say it. When I say Mount Sinai versus Sinai, or I what's the right with Sinai? It's Sinai, right? I say Sinai. Like that's because I don't think twice. I just say it as I speak. That becomes authentic, even though it's wrong, which builds trust. If I was faking that, it would be different. But I'm not faking that. And there's some communicators that become very, this is where the better use of the word narcissistic is, because they figure out how to manipulate audiences by speaking in a way that can garner sympathy or empathy or humor in a way that's not real or authentic. And if you do that, your days are numbered, in my opinion, because you can't keep up that act forever. And that's in business and in life, right? Like if you're not building a real product that's not going to grow, Like, you know, like that was the biggest bet with Palantir at $8, right? Like, are they actually building some shit, or are they serving us some horseshit and telling us it's going to be the best thing in the world? Now we're obviously seeing that it's real. Then you'll get the momentum. But if not, you're going to fail. So I think that's the contextual nature of how you try to communicate in a way that gets an audience to care about you. The other answer to the question, someone said, like, how do you become a good speaker? The other really answer to that question, because I thought about this the other day, now that you bring it up, is that you kind of do have to just speak with confidence, dude. Like you kind of do just have to speak with confidence. Like when I was describing the carry yen trade or whatever, I'm not an expert on fucking Japan, right? But at the end of the day, I still was like, okay, I'm gonna learn about this, and then I'm gonna talk about it. And then when I the Monday after the whole collapse, when I have to talk about it, I just talked about it with confidence, because I was like, well, I studied it for 3 hours. I know what I'm talking about. I don't think I'm gonna get the details wrong. And then I just talk. That part, I don't know how to coach that much, because I've had kids that, like, when they try to debate, they're just not confident, and I'm in the back of the room watching. And after the round, I'm like, you got to have some more umph in you. Like, it's just like, you're boring, dude. You're just not interesting. And a lot of times they don't understand that sometimes it has to just be internal, because if you don't have the confidence, especially if you think you know what you're talking about, like this Japanese carry yen trade, and you've done all the studying and now you just have to communicate it effectively, if you don't have the umph in your step to really like explain it with passion and significance and make people care and like really break it down in a meaningful way, then no one's going to care, right? And so it's going to be very hard to effectively communicate if you don't have the confidence in speaking about the stuff that you're talking about. Talk as fast as you do, but like Yoda. Alex says, tell the truth. Do you replay your live streams and listen to your own voice when you go to bed? No, I do listen to segments of the live streams just to see how like certain segments went, but I don't listen to the full 3 hours, dude. Now again, I did that when I did debate. You guys know this. I would record my debates and then I would listen to myself after the debate to try to, like, I would listen to the whole 40 minutes debate round to see, like, hey, how did I do, right? And how did my opponent do? And how did I argue against them, etc. But I don't listen to the whole 3 hour live stream because I just don't have the time to. But like, there are certain segments where like I'll replay it just to like kind of get a glimpse of how it sounds, which is important. It's like watching gameplay footage, you know, like if you're on a basketball team, you have to watch gameplay after your game to try to figure it out. But yeah, I don't listen to the whole streams. Amit did debate. Yes, I did debate in high school, and now I still coach debate in some of these other, in some other parts, some other high schools. Like most of the kids I coach are in California right now. And yeah, like, dude, the experience sometimes with coaching these kids is like, they just suck. And they're like, they don't have the internal confidence. And like, my job as a coach is not even to get them to learn how to speak. It's to give them the confidence so that like, we'll figure out the like substance of the argument stuff, but like, you have to get up there and like actually sound like you give a fuck. I had this one girl once and she's just like, she just wasn't confident. And she had a lot of self-esteem issues. And so after a round, if she would lose, she would start crying aggressively. And, you know, her parents were trying to deal with it. But a lot of times debate is really a metaphor for life. Because when you fail in a debate round, when you lose in a debate round, when your startup doesn't work, you got to get the fuck back up. Otherwise, you're dead. Otherwise, you're just like, otherwise, you're not going to win the next round. You're definitely not going to build another business. Like you just, so I think a lot of times debate is metaphorical. And one of the proudest things I have with my coaching relationship with kids is that when they lose, I try to get them to realize it's life, dude. Like, you're not going to fucking win like, you're going to have some bad rounds. It's just going to suck. Like, maybe the judge just doesn't like you in that round and you don't even know what reason, but you lost. But if you can get to the next round and get up, be confident and not feel the pain of losing in life, you're unstoppable, bro. You're unfucking stoppable. Because then you're just going to keep eventually the world wants people to win because the world wants to progress. So if you need to win, you're going to have to go through some failures on the process to winning, but the world will help you if you try again, because at the end of the day, the world wants to continue to propel, and people need to try in order to propel and advance the world. So you got to get up and you got to try. But that confidence is absolutely necessary to even have a chance to get back up and try. Those kids are watching right now. I think some of my kids found my YouTube channel a while ago. And they were commenting in the video once. They're like, Coach Amit. I was like, dude, this is not where you comment. Please don't comment here. AI Money says, you are supported by a community of experts like Chris and Arnie that builds confidence to be okay to make a mistake and humble enough to be corrected. You've built a great community. Yeah. And that's the other thing, dude. It was so awesome when Chris and Steve were on here. His mom makes him do stuff so he stops talking. Dude, that's great. I got to show my mom that. I got to take a picture of that. That's a funny one. It was so awesome when Chris and Steve came on August 5th, right? And just because this is my first time I saw like a real drawdown in a bull market. I mean, again, 2020 was whatever, right? And then all I lived through was 2022. So 2020, like August 5th was the first real drawdown I had. And it was nice to have older people that have been through this shit come on the show and kind of just like break down how to really think of this stuff. And so that community is so important, and it helps to continue to build more momentum. Did you see Joe Rogan and Adam Sandler? They were speaking about stand-up in a similar regard. I didn't see the podcast, but Adam Sandler, yeah, dude, every stand-up comedian. This is also another reason why I'm motivated every morning and I like really take this job seriously and the opportunity seriously. And I'm very humbled by it, is because I've studied stand-up comedic careers, and it is ruthless. What is a stand-up comedian? They stand up and they comedian. that was kind of funny. Okay, anyway, see, what I did right there was an example of what a stand-up comedian does, which is bomb on stage. Now, did I mean to bomb? No, I actually thought that would be a funny joke, but then as soon as I bombed, I realized, oh, I can use this as an example to prove what I'm saying, but I actually thought it might be kind of funny. So see, we're all doing this live right now. But stand-up comedians bomb on stage. And when they bomb on stage, they have to deal with the fact that people just don't think they're funny. Like when you stand up and you don't be funny and people don't laugh, it's really tough, which means you don't get access to an audience. So the hardest thing for stand-up comics is figuring out, hey, I want to entertain the world. I want to like talk about that moment where, you know, I was on the school bus and some scenario happened and I want people to laugh at that. Like it's such an interesting career when you really think about stand-up comedians. Like their entire goal in life is to literally stand up and say something that will get someone to laugh. That's not my goal. That's not my goal in life, because I've already achieved it many times, right? I've already achieved the goal, so I don't have to achieve, because I do that every morning. So that's not my goal. But for a lot of stand-up comedians, that's their number one goal. They want to do that. If you don't have access to an audience, and if you can't communicate in a meaningful way, you don't get the value of having people listen to you to even have the chance to speak in a way that could potentially make them laugh. So what I take very seriously is that on the market open, market close, people come for a certain type of content. And within that certain type of content, this goes back to like innovation and really building a brand in a meaningful way. In that type of content, you can still speak around other topics and other issues that are hopefully entertaining and valuable to people. That gets them to like enjoy the process of listening to you communicate, which is the whole goal of stand-up comedy and just content in general. You want people to enjoy your type of communication. For stand-up comics, they don't have their own audiences, right? It's just really hard to go live every morning as a stand-up comic and have 1,000 people join, because like, what are you going to talk about? Like some random joke that you came up with? No, but like the reason people join the market open is because they want to know about the stock market, right? So you have that audience built in, and then basically what I'm trying to say is I get to refine my communication skills and hone in on them every day, 5 hours a day, 2 hours in the morning, 2 hours in the afternoon via these live streams. And I get better. Now, I somehow figure out a way to get worse with the pronunciation of certain things, but at the end of the day, I get to refine those skills in a meaningful capacity. So comics don't have that unless you're big like Dave Chappelle. Like you can't just go live and have people listen to you. And it's a really ruthless environment to try to build that shit out. Story of every rock star. Same thing with music. Same thing with music, dude. If you want to be a musician, you're not just going to go live on YouTube in the morning from 8:45 to 10 a.m. and play a guitar. Like no one gives a fuck until you make them give a fuck. And making them give a fuck is very difficult. My point is making people care about your communication, which goes back to the conversation around public speaking, is so hard. And then growing that in a hyper growth stage is really hard. So when you have the opportunity, when it's about being rich or poor, I pick rich every time. When it's about growing or not growing, I pick growth every time. And that just means you have to keep putting in the work to try to grow and never let that go. Stand-up comedians are the best storytellers. 100% agreed. Stand-up comedians are absolutely the best storytellers. And the best stand-up comedians are like the legitimate best storytellers, because they have to concoct a routine that actually gets people to care. This comment is still hilarious. His mom makes him do stuff to stop talking. So as you can see, I think I just went into a rant for like the past, 40 minutes, 35 minutes? Well, we had a great day in the markets, right? We talked about the markets. Markets are done. There's nothing too crazy happening after hours right now. And so I think that is one of my skill sets. Like if I start talking, I can just start talking. Bitcoin right here, 57,000. And so when it comes to the stock market, if you need me to talk about the stock market, I'll keep talking about the stock market. But if there's no news in the stock market, I'll just talk about something else. and I'll keep going. And I think that's one of the moats of my channel and of me as a human being is like, I just like the process of communication so much that I'll keep going. And I think you got to have that if you're building anything, dude, because it's just very important to have that growth momentum internally built in. Amidst stand-up comedy is his pronunciation. Oh my God. That is hilarious. That is hilarious. All right. I think we're done for the day. Someone's asking about that healthcare AI company. Again, it was Tempus. Tempus. That was the one we talked about. Tempus. Tempus AI is the one Kathy's buying. That's the healthcare AI company. TEM, I think, is the ticker symbol. But I don't know too many other tickers that are doing more like drug discovery AI in and of themselves. All right. I think that's it. Every time you butcher the English language, no one really cares. In fact, we look forward to it. I'm not doing it for fun, dude. I'm not doing it because it's fun to do it. Like, it might sound fun, but like, I legit, like Massachusetts, I just like, it's just how I talk. And again, that authenticity, I think, is also important. S&P is down a little bit after hours, 552. SoFi down a little bit. Nvidia down about 0.5%, 122. Robinhood 1950 after hours. Bitcoin still 57,000. Where's Palantir? Palantir after hours 3112. Reddit down a little bit. And then Robinhood here 1950. S&P again 552.95 on the day. All right, I think that's it. I have one more video coming out today with Ileano. If you didn't catch the market open, we talked about why they launched the Palantir merch store. So that'll be out in like an hour. And that's it for me today. I will be on Finance Junkies on Saturday. So Saturday, 7 p.m. Eastern, 4 p.m. Pacific, I'll be on FJ. I don't know who else is going to be on, but I'll be there with Carlos. And then tomorrow, Steve should be on the market close. And then we'll be back to the market open as well. All right. That's it for me. Predictions for tomorrow. I just hope we maintain this momentum. I hope we don't sell off too much tomorrow. We'll see what happens because it's a Friday, but if we can keep some of the gains we had today, then that would be important. All right, cool. Thank you, everybody. Appreciate it. Hopefully you guys enjoyed. We'll be back tomorrow on the market open at 8:45 a.m. and keep going from there. Green day in the market. Awesome day. Hopefully it was a fun stream, and we'll be back tomorrow. Bye, everyone. Oh, I do have the fuck. I've heard some Martha just reminded me. Doesn't that start in 12 minutes, dude? Holy crap, dude. This is what I mean about being a content creator. Let me text my guy. Are we still doing the spaces today? Are we doing spaces today? Dude, I forgot. I have another 2 hours of talking if we're doing it from 6 to 8. I don't even think we're doing it today because he would have texted me by now. I think even he got a little too busy. But see, this is what it is. If you wanted to have hyper growth, you got to do these Twitter spaces. You got it. Like, I'm tired, bro. I just talked for, 2 hours, talked for 3 hours in the morning. Now my vocal cords are getting hit. But we got to keep going. We got to keep fucking going. All right. Thank you, everybody. Appreciate it. We'll see you guys. Okay. He just said, yes, we do have the fucking... Your boy. I was hoping he kind of would say no, dude. I was hoping he would hoping he would kind of say no. I'm tired, bro. I legit forgot about this one. All right. So if you want to hear me talk for the next 2 hours on Twitter Spaces, be on Twitter. We'll talk about stocks and technology and all that shit. All right, everybody. Have a good one. This is me going off to work. Like when I joined the market open, I'm like super excited. Like that's my work. This is me actually going off to work. I'm just tired, dude, at this point. But we'll be talking. So Twitter Spaces, Twitter's in the description, and we'll talk tech, have a bunch of people on the panel, and keep going from there. All right. Have a good one, guys. I'll see you tomorrow. Good night.